Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader live in studio. Joining me on this Thursday morning is our senior economist, Tracy Shuchart.
Good morning, all.
Good morning, Shai. And of course, joining us not in studio, but on the big screen, looking good as usual, my man, our senior market strategist, Jimmy Cagnina. Good morning, Jimmy.
Good morning, Deli. Good morning, Shai. It is a glorious day down here on the island, and we are not disappointed with some markets that are moving.
Yeah, I mean, you guys have been spot on with the metals, and I've talked about it as well. That is the market that has the fundamentals and it has the technicals behind it. That's when you get the strongest moves, and they just continue in those directions until who knows when. But this morning, the topic of conversation is going to be around the metals.
Oh, absolutely. So, we had that compression in both, or I call it a coil. I mean, the silver market's been coiling sideways for weeks, and it finally broke out to the upside. And we had the same thing happen in platinum. Although we did have a bigger pullback in platinum, we still didn't get a retrace of the breakout area. So that market is bullish.
Yeah, I mean, I talked about my platinum trade. I mean, it was a great trade for me. It's really the only real swing trade I've had. I had the Canadian dollar one, but that was kind of like, I trailed that. I made a little bit on it, and it's just like I worked a bid to get back into platinum, couldn't get in. And of course, the ones you don't get in are the ones that run the quickest. It's like I couldn't pay up for it because the risk just didn't make sense to me. But when I look at the chart, at least I'm not fading it. That's the way I look at it, right? I mean, sometimes you look at things and you're just like, man, I wish I was still in it. But the best thing is I've not faded anything, and I've stayed out of equities. I mean, again, know your style, know the market environment. That's what we try to cover here every morning. And of course, good morning, chat. I didn't say good morning to the chat. I said good morning to YouTube and not to everybody else. We've got Paulie in here, my Serona. We got Steve. We've got Infinity Works. We got Trading Poker, my man Rob. Good morning, everybody in chat. Thank you so much for joining us here early on a Thursday morning. And really, it's been quiet in indexes. I'm sure that we're going to be talking indexes all day, but is there any news, anything overnight, Shai, that we need to get to?
So, well, we did have a little bit of data this morning. We had Challenger job cuts. May job cuts were up 47% over the same month last year, and the cuts have spread to other sectors other than government. So this is for other reasons than Doge. Its biggest cuts were in retail and the service industry. So we keep talking about, we're looking for clues that we may see a crack in the labor market. So this kind of data is important as the Fed's mandate is maximum employment. And so they're looking at anything that would say there is sort of a crack in this market. So that came out this morning. I'm sure they will. I'm sure the Fed will be keeping an eye on that one. As far as other news, I should say, we have Citigroup eliminating 3,500 tech positions in China. Procter & Gamble is cutting as many as 7,000 office jobs over the next 2 years. So again, we're looking at big U.S. companies that are cutting jobs, cracks in the labor market again. And that is really it. I mean, we had a decent Japanese bond auction, which kind of brought a little bit of relief globally, because what we have been seeing across the globe is kind of poor auctions on the long end of the curve. So, the 20, 30, 40 year,
yep.
Have been really poor. That gave bonds globally a little bit of relief this morning or overnight. But besides that, that's pretty quiet.
Yeah, pretty quiet. This morning you've got dollar pretty much flat against everything. Yen is down a little bit against the dollar. If there's any standout in the currencies, it's the yen, maybe coming off of what you talked about there. Energy space, pretty quiet as well. Crude's up almost half of 1%. I mean, it's not much. It's up 26 ticks. I mean, that's nothing.
Right.
They could do that in a 30-second bar. It's
Right.
talking about a half of 1%. Like, that's a big deal. But the other thing that I see really, I mean, bonds continue to hold a bid. I mean, that is important, I think, for the overall market psychology right now, that the bond market is not going down anymore. It's been slowly, gradually going up. We talked about this the last couple of days. It's been a decent low. Anything else you wanted to add, Chad, before I get to Jimmy?
But copper is up too, so that's good.
Yeah,
We hit
2%.
yeah, which is nice. We hit that important $5 psychological level, pulled back a little bit, but still very close to that mark.
Yeah, and you and Mike Burke talked about this the other day. It took out that key high. I was looking at copper from middle of April. I mean, again, copper still looks pretty rangy in the scheme of things. But as that starts to go, this is going to be a continued conversation. I put it in my note. This is a reminder. Gold is hedge against central banks, hedge against inflation, however you want to look at it, right, and categorize that. When you start seeing silver spike the way it has been, oil is starting to continually, it's not pushing higher with any velocity, but it's not going down.
Right.
Okay. And you look at some of these commodities, not a ton going on there, but, wheat up modestly, corn up modestly. I wonder how much inflation starts to become a story once we get through these tariffs. It's going to be interesting to see what happens and what that means for stocks. Jimmy, overnight, we've been kind of talking about the landscape. What did you see?
Yeah, I mean, Treasury bonds are the gift that keeps on giving right now. I mean, this is the second rally in a row. Yesterday, we had a big rally in the 30-year Treasury bonds. And I think, Deli, you called it, at the end of May when you said, "Hey, I think we have a tradable bottom here." Well, we have a rally going up here, and not only that, I mean, if you think about how far we've retraced back up ever since that peak high that we had at the end of April, we're 50% of the way there. We're breaking through all the moving averages right now, and stochastics are shooting straight up. The cash is now at last time I checked 4.85% on the 30-year. So this is surprisingly resilient right now. There's no sellers today on the 30-year Treasury bonds, at least not yet.
And that is important, I think, because it's setting the tone for what's happening across all of the markets. When you have interest rates starting to come back down a little bit, remember, when rates were going down quickly, I said when rates are not going down, they were going up quickly. Bonds were going down quickly. That is a fear factor to the marketplace. And you got to assume that equities are going to respond off of it. Once you get a calmer bond market and you get a bond market that's really, it's a pretty good amount off of this low, but it's still in a big range. And I think that overall sets the tone for what's happening globally with markets, knowing that interest rates are just staying here. People can go out and do business, and knowing that rates aren't coming down or up too quickly, I think that that's an important tone center for equities. A question that Andrea put into the chat, and we were going to get to this. Well, first off, any data for today, and if you can, Shai, give us some expectations of what we're looking at tomorrow with NFP, because it does seem like today is probably going to be a slight bit of a snooze fest for equities. Maybe a quick preview on what today's data is in NFP.
So today's data at 8:30, we have jobless claims and continuing claims. We'll go over that. Obviously, we'll be on air. We have trade balance, imports and exports. Trade balance and imports and exports are not going to do anything to the market. Again, jobless claims are going to be important to see as a gauge for the labor market. Of course, 10:30, we have natural gas inventories, and 1 p.m. Atlanta Fed GDP now. So claims and continuing claims, probably the only market moving data we may have, unless it's not, above expectations. So they're expecting survey for initial claims is 235, kind of where it's been. Again, I want to stress where the Fed will get really concerned is if we start seeing 350 or more. Then that becomes a real problem. Continuing claims expectation is 1.910 million, kind of in line with what it's been. As far as non-farm payrolls tomorrow, job expectation is 126K. Now, Apollo just put out their expectation, and they're expecting non-farm payrolls to be much worse, like 64,000. That's the lowest that I have seen, which would also be a cause for concern in the market. So we'll have to see. But for this particular non-farm payroll, the expectations are the widest range that I've ever seen from
Really?
from the banks. It's crazy. So we've
So
got
64 on the low end. What's the high end?
64 on the low end, and we have 176 on the high end.
Got it. I mean, and is that range to you reasonable for what you've been seeing? We remember we had ADP yesterday. It was a little bit of a market mover, not much. I mean, we'll see what claims are this morning. Maybe we'll follow that up.
Yeah.
But I mean, does that seem in line with what your thoughts are?
Well, I mean that's a really big range to me. I mean, I've never seen a range that big. Usually, everybody's kind of around the same number.
Yeah.
So that just leads me to believe that people aren't really sure about what's really going on in the labor market right now. And I think on the low end, I think those people are seeing kind of some of these cracks that we're starting to see, and maybe just leaning a little too bearish.
That's probably why the bond market's rallying.
So, yes.
Yeah, I mean, that's probably some factor of it. And, of course, we'll be talking about that today, the claims numbers. So expect that to be market moving. We're going to have our guy, Russell Rhoads, in here. I really love Russell. Great guy.
Russell is great. So I know him from Chicago. So do you. He worked for CBOE, which is the options exchange. So we're going to have a great conversation with him. He is now a professor at Kelley School of Business.
Yeah, he's great. I normally talk to him every year around this time anyway about Russell Recon. So I'm going to talk about the Russell 2000 with him. It kind of matches his name, so it's
I know.
What are you going to talk about Russell? How about we talk about the Russell? No, he's a great guy. I look forward to really getting into it with him. Jimmy, back to you. You heard Shai talk about this range of unemployment. You've been following Unemployment Friday for, I don't want to say how long. It's kind of been a long time. But have you ever seen a range that wide? And do you think that is probably some of the reasons why you're seeing this lift in the bond market?
Oh, yeah, no, for sure. We used to call it Unenjoyment Friday down on the floor back in the day.
Yeah.
It's just so much uncertainty. And, well, you look at the environment we're in now in Capitol Hill with tariffs and, the big, beautiful bill. I don't know what the status of that is. So there's a lot of uncertainty in general surrounding all of this stuff, and I'm not surprised that these ranges are so big, and we are seeing some surprises. I mean, yesterday's number was a surprise at ADP, and that thing never moves the market. It did move it a little bit yesterday, so I think all eyes are really focused on this right now.
I think that we're set up tomorrow for probably a pretty busy day in equities because it's been so quiet, and I actually will be very interested. Number one thing I'll watch as I do on any Unemployment Friday is what is the bond market doing, because the bond market has been rallying. Now, what happens tomorrow if that number is on that low end? Is that baked in, or is it get accelerated? I think you probably are going to have a busy bond market tomorrow, and that's going to be, I think, probably more of what I watch. I don't think it is going to be more of what I watch versus what happens in equities, but that's going to spill over into what the equity markets is. Before we get to this morning's Edge report, again, Shai, I'd like to talk just a little bit more about the unemployment coming into tomorrow, just because I do think that this number hopefully sets the tone for what happens. Is there anything else that you're seeing that, in the macro world that we need to know about?
I mean, as far as the labor market is concerned, we had ADP and Challenger job cuts, which were kind of negative for the market. And most people don't pay attention to those numbers so much, but it seems like it's becoming a bigger deal. If you look on X, I mean, nobody ever tweets about Challenger job cuts. They were this morning. And so I think definitely all eyes on the labor market right now. I think that's where all the focus is going to be, and where I'm seeing more and more analysts focusing on. So
so it is a central point of focus tomorrow. And when you have consolidating markets coming into an Unemployment Friday, you can expect a move one way or the other, and especially with the bond market that's rallying, and that's somewhat predicting a softer number.
Right.
I think that's what we could all kind of agree on that. And we're seeing in chat questions of what are we expecting from today's news. We will get into that, of course, with Russell Rhoads, and we'll pick his brain on all sorts of things. And of course, we'll bring you the live data here. But first, it's about that time for this morning's Edge Report. Take it away, Jimmy.
All right, let's just continue with the 30-year Treasury bond discussion on an intraday chart because there's some great targets here. We have R1 as part of the pivot series. We're pretty close to that. That's at 114 spot '09. Now that's amazing. We're at a 114 handle. Remember, not too long ago we were at a 110 handle. That's a $4,000 per contract move relatively quickly. So it's been a nice ride up. Mentor Q 1-day max. How cool is Fabio in the studio yesterday? 14:30 seconds is a target on the upside. And above that, really, you got that JAX 3 all the way up at 115 even. So right now it's looking like a strong rally. We lost VWAP in the rearview mirror shortly after the initial balance in the London session. On the downside, we do have that JAX 2 level at 113.16, but the point of control is looking pretty good right now at that call resistance level at 114 even. We'll see if that continues or not. Moving over to, I got to show the silver chart. It's my favorite chart right now, this morning anyway. Let's get this data populated in here in a second. And there we go. This is a long-term consolidation. We've been in this long-term consolidation, and boom, we had a pop out on Monday. And I thought, hey, maybe we're going to have some more consolidation. I should have listened to Shy. Boom, another massive break to the upside. And you can see my area of resistance here, which matches the highs that we saw on the 26th of March. And we just blasted through it right now, driving up to that $36 level in silver. Super mega bullish right now. And look at this intraday chart. I mean, this is a capital P-shaped distribution here on the volume profile. Point of control sitting right now at 35.97. There's no targets anymore up here. There's no targets up here for bulls. It's all empty space. On the downside, if you want to see a pullback, we have R3 sitting here pretty nicely at 35.55, and that's going to kind of converge with that VWAP if we continue to stay sideways here, if that's VWAP for the session. And then a little bit lower is that 1-day the 1-day max. I know it's weird saying that because we are way above it right now, but this is part of the Mentor Q secret sauce, and it's pretty awesome stuff. By the way, let's take a look at the Euro FX because I do believe across the pond there has been a rate announcement or about to, if my facts are correct. Right now we have a complete doji here on the screen, and this is the Euro FX versus the US dollar. A little bit of sideways consolidation, although the moving averages are sloping up nicely. That's the 8 to 21 to 50. And then the stochastics are super, super strong, and they have been for a while. Let's just dig into that intraday chart for you Forex traders out there. We have a lot of great targets. Previous sessions highs. There's a good one, 1.1443. JAX 1 is at 1.145. Excuse me a minute. And above and beyond that, we have that R1 is another target at 1.1459. On the downside, the pivot's holding really nicely. Support here in the Euro FX, 1.1412. And then that call resistance level at that even number, not surprisingly, 1.14. So decent, the announcement I think hit the street maybe a couple seconds ago. A lot of price happiness or uncertainty on this doji that we're seeing in this 30-minute candle here in the midst of all this action. Lastly but not leastly, let's just shoot over to the main event here. Let's go to that June E-mini S&P contract, not rolled over yet. Really kind of a nice, I don't know, I'm going to say that this is an ascending triangle pattern. Maybe you got to use your imagination a little bit. I don't know. But the moving averages are driving up pretty nicely here. We have fierce resistance up here between 58, 82 and 6,000 right now. And this is a double top, if you want to think about that from a charting point of view, that started back on the 20th of May. Stochastics are overbought, but it could stay strong for a long period of time. Look at what happened here from April 24th all the way to May 22nd. Super, super strong. And remember some of the tips that Dave Keller told us yesterday about stochastics. Let's keep track here on the intraday. All sorts of levels here. Now, this is this distribution is skewed way to the bottom here. The point of control was established overnight. Jack's 3 level approximately the same, 59.75. On the downside, yeah, we got some room. We got S1. S1 is approximately 59.67. A mental Q blind spot, and below that S2. So there are some nice targets on the downside. On the upside, of course, we have that call resistance at 6,000. It's been formidable right now, and that's kind of my target on the upside, as well as look at the top of the London initial balance. Also, that's about 59.94. So there are some targets for the upside as well. We will see what happens today. That is today's Edge Report. Back to you, Deli and Shai.
Thank you, Jimmy. And we are now joined by Russell Rhoads, Professor of Finance of Kelley School of Business. Russell, good morning. How are you?
I'm just thrilled to be here. Hi, Shai. Long time no see. I think we've only seen each other in person
Hey.
once at a Thanksgiving, like a straggler Thanksgiving, like decades
Yes.
ago. So we've survived in this market between that then and now.
It's great to have you here, Russell. This morning, we just had some news that came out. I want to go to Shai first, and then we'll get to you, Russell. What happened with ECB, Shai?
So ECB cut rates for the 8th time, widening the gap with the Fed. I guarantee that we are going to get a Truth Social post from Trump after he hears this news, kind of bashing on Powell a bit. So we'll see if that's market moving at all.
Cut the rates. That's what he's thinking. Russell, again, great to have you here. A lot to talk about with you this morning. Metals are front and center of the focus, but we just got this ECB news. Maybe initial thoughts and reactions off of that and what Shai has said about, for sure, it's coming. President Trump going to be tweeting about Powell cutting rates.
I have a funny feeling. Is he going to be saying that we should be following Europe's leadership on something? I just that if you think about it,
Could
that's how
happen.
he would be. That's how he would be pushing that one. The East. I think there was a 99% shot that this was going to be the move that they were going to make, so it shouldn't be overly surprising. And I doubt that it really puts any pressure on Powell. I think Powell's going to pay attention to the factors that he's supposed to pay attention to. Every time he gets a question that's kind of outside of what the Fed is supposed to be doing, which is the best employment that we can have and the lowest inflation that we can have, he always circles back to that. So any argument that Trump has that's outside of what the Fed is supposed to be doing, I don't think it's going to have much of an impact on him. I don't think it has much of an impact on him. He just considers it noise. Before we got started, one of you guys was asking me about Memphis State, where I went years and years ago, and there was a guy in my fraternity that was on the basketball team, and the basketball coach at the time just yelled the whole game. And I said, what is it like dealing with that? And he said, it's just noise. And I think that's Powell and Trump right now. It's just noise. It's not going to have any impact on him whatsoever.
Yeah.
So the market shouldn't react to that either.
Yeah, and as you said, it was 99% chance. You had a minor move in the euro, but not much there. But I want to get to the metals with you this morning. They continue to be the upside leader. You've got fundamentals behind it, along with technicals. That is the dominant theme, I would say, that we've been talking about here as far as what we follow in the commodities and future space. What are your thoughts on gold, silver, platinum, copper, all having strong moves this morning?
I was pretty excited when I saw that's what you guys were talking about as we started out, because within the metal market, and my real focus is volatility, and you can use VIX to get an idea of what's going to happen with the S&P 500, but implied volatility, or the volatility surface for the commodities, especially in the metals, you can really get a lot of information out of that. And looking at just the out of the money call implied vol on silver and the out of the money call implied vol on gold, you can tell that silver is the one that's breaking out right now, and the option market thinks that move's going to continue. And it's not. It's actually kind of neutral with respect to gold. And I know that gold has been outperforming silver as of late. If you read the tea leaves in the option market, it's kind of indicating that that's going to reverse or continue to reverse. So the same thing that you guys are seeing on the charts is showing up in the option market as well. I looked at platinum. That's one I don't look at very often. And if I had to rank gold, silver, platinum. As far as bullishness goes, it'd be silver at the top, platinum second, and gold third right now. Real, just based on what people are doing in the option market this morning.
That makes absolute sense. And speaking of options, I wanted to talk a little bit about zero DTEs and your thoughts on whether or not these are market moving because they've kind of exploded in volume as far as people trading them. So how do you see this affecting like the index markets?
Not having, I'm kind of in the minority. And when they first came out, and a lot of people were arguing that this was going to cannibalize some of the longer dated option activity, which would maybe make VIX not have different type of information or not be as informative as it has in the past. And what I did was I took a look at how VIX in 2022, how did VIX react to the S&P 500 versus how did V stocks react to the Euro Stoxx 50, because they didn't have daily expirations on V stocks. And typically there's very similar relationships between those two pairs. And VIX and V stocks acted pretty much the same relative to their underlying in 2022. So I've always felt like that it really has not had that much of an impact on the day-to-day trading in the S&P 500. The excess volatility that we've gotten, you could try to blame, and I'm thinking of what's happening this year. You could try to blame that on the daily options. I just think that's a factor of, we're all hanging on what's going to be the next tweet, et cetera, and totally justified, not being exacerbated by what's going on using the short-dated options. You could trade a short-term opinion on the S&P 500 for decades before the options came along using the futures. So I think it just added another tool to be able to do that. And I really don't think we've seen an impact on longer dated implied volatility, which is what would happen if everybody was shifting to the shorter dated options to hedge some of the things that they have in the past. And if anything, if there's been anything that market force wise has come along and changed the composition of the markets, is you've got these systematic sellers of short dated options coming into the market every single day. And one of those things that we say on Wall Street with respect to options is professionals sell and retail buys, and all of us professionals are taking advantage of retail traders that buy the volatility. There's so much systematic selling of index option volatility that you actually, if you just daily bought the one, if on the close yesterday, if you bought the 1-day straddle that closes today and you did that every day of the week and every day of the year, you'd actually make pretty decent profits. And consistent option buying is not supposed to work, but I think there's just so much systematic in there that's what's happening, and that's very unique to the S&P 500 and NASDAQ. And in fact, the one market that you could consistently make money selling options in, or do better than those other two markets, is the Russell 2000, which my namesake that came up a little bit earlier. And I think that's because it's not as liquid a market and it hasn't attracted the institutional volatility sellers using the short-term options.
Yeah, we're definitely going to get into the Russell. We're about a minute and a half away this morning from some data. Maybe, Shah, we start to preview that, and then Russell, we're going to take a look at the indexes, and of course, I'm going to have the bond market up as that number hits, because the bond market seems to have found at least a short-term low. And right now for jobs data, I think that's the market you have to keep an eye on, as the bond market is pricing in, Shah. We've talked about this. Bad news. We think, right? Or potentially. And so this morning's jobless claims, what are we expecting here, Shai?
So continuing claims are supposed to be 1.910 million. Initial claims, 235. Initial claims, 235,000.
And where do you think would be a miss outside of there where we would probably see some real market movers here?
I think if you saw over 300 or 350, that would be a severe problem. And then if this comes in much lower than expected, obviously that would show strengthening in.
Yeah. And what number do you think that would be, guesstimation?
So, if we saw, under 200, because really we've been in this kind of like 225, 227 to 235
Got it.
for weeks now. So if we just see something, really big on either side, that would be a problem. That would be
That'd
kind
be
of a market mover, right?
Yep. Okay. So should be getting that as we speak. So
Right. So initial claims 235, actual was 247,000, so a bit higher than expected. And continuing claims expected 1.91 million, came in at 1.904 million.
okay. And so overall, relatively in line to what you thought, right?
Relatively in line.
Yeah. And you see an equity indexes come off a little bit. I mean, not much, 10-point move so far lower in ES. When you look at ZB, bond market, steadily bid. I mean, it just really didn't do much on that. When we go to 10-year, we'll take a look at that in a second as well. Steadily bid, so you got middle to long end of the curve, stays bid. Let's take a look at what gold is doing real quick off of that number. Gold really almost non-reaction there. Silver, no reaction. And platinum, really no reaction here. Like I said, small little move lower in equity indexes, now getting bought initially back up. Silent in the bond market. Russell, we'll go back to you. Initially coming off of this number, any thoughts on maybe what we see tomorrow? Obviously, this unemployment number is going to be important because markets have been sideways. They're actually waiting for a spark. I mean, what do you think about today's number leading into unemployment tomorrow?
I do a lot of work around how the market reacted, and then because we got short data index options, what was priced in and what ended up happening, and one of the things that I'm thinking about doing as I was listening to you guys is I wonder I would like to see what happens the Thursday between when we get the ADP number and we get the employment number, because I would hate to be in your position and have to talk about what's going to happen in the markets every Thursday between those two, because it seems to be a very quiet day. One of the things that I heard from some of the statisticians that follow these numbers and put these numbers together is that some of the government job cuts are screwing around with these numbers. And I would hate to be in a position where I really have to predict what's going to come out of the Bureau of Labor Statistics, because it may be based on, data that's being compiled by fewer people in the past. And there might be more risk that we're going to get some revisions as we go along. I'd definitely be paying attention to a revision from last month's number as well. It'd be my second look after whatever the headline number is. Now, as far as the option market goes, the S&P and the NASDAQ, the S&P has an average move of 0.9% on employment day, looking at the last 12. And that's about 20 basis points higher than an average move over all days. And the NASDAQ 100, 1.35 up or down over the last 12. So, and right now the S&P, because that option market's open, it's pricey. The at the money straddle is just a little over 1% of where the S&P is at, which if you think about it, that's kind of cheap for a number that has an awful lot of uncertainty around it. So if, I'll be looking at getting long volatility one way or another going into tomorrow's number, and it really will be based on, in the last half hour of the day, where's the at the money straddle on the SPX priced, and where's the at the money straddle on the NDX priced relative to history around the employment number, and whichever one appears to be cheaper, that's probably the one that I'm going to go with. But already, I was really surprised to see that at the money straddle at just over 1%. The one that expires tomorrow on close.
Yeah, and we've only got you for a short period of time, so I want to get to two quick things. First is explain to everybody that doesn't understand the at the money straddle why that's important to you.
I'm sorry. Sorry. So what I price out is I'll take a look at where the S&P 500 closes each evening, and whatever the closest strike price to the closing price on the S&P 500, I take the put price and the call price take the midpoint of the two and add them up. And that's how I get a prediction for the market. And in fact, I use that number just like I use VIX. In fact, I think I found that it's a better predictor of the next day's volatility than VIX. So that's what I'm just using the at the money straddle, and I actually track 1, 2, 3, 4, and 5 days. And 1, 2, 3 days are always pretty consistently underpriced, and 4 and 5 days are actually consistently overpriced. So there's all kinds of opportunities in there.
Yeah, no, thank you for explaining that. We got a lot of people that are probably new to options, and
Gotcha.
you're a great teacher of understanding how to use them, and I appreciate that. Last question I have to get to. We're in Russell Recon month. You and I have talked about this many times over the years. You got Russell Reconstitution at the end of June. The Russell has yet to come alive. I know that you look at Russell's performance versus the S&P 500. It's continues to be the lagger of the market right now, and I am in the camp to where if you're going to have a sustainable, strong bull market, I think you have to see the Russell start to perform with the S&P and NASDAQ. I don't think that this divergence can go on forever. Maybe it can. Who knows? We've seen a lot of things I didn't think could happen. But nonetheless, thoughts on the Russell 2000?
What you said with a sustained rally, usually we say that the Nasdaq needs to be leading us higher because technology stocks are so economically sensitive. But I do think that if the overall economy is going to be rebounding, all of those smaller domestic companies that make up the Russell 2000 should be participating as well. And yeah, I do look to the Russell 2000 relative to the S&P 500 and Nasdaq when we have positive weeks to see if maybe I think we're going to start heading to new highs. And as you said, it continues to lag, and it's just not participated. In the academic world, we all say that one of the Pharma French factors for outperformance is small cap stocks. We reached a point a few months ago where from inception of the Russell 2000, which has not been around as long as the S&P 500, from inception, the Russell 2000 has now underperformed the S&P 500. So that historical belief that small cap stocks are one of the factors to outperforming, it has not worked for several years. Now, that doesn't necessarily mean that they're going to come back around, but I don't know if there's something structural in the world that large companies can just gobble up small companies, and it's too difficult to be innovative and have a small company that grows to be a big company. But I would expect the Russell 2000 to lead us higher, but over the long term, I do start to question whether that small cap factor is one of those things that you should focus on when you're trying to outperform.
Yeah, well, we got to stay tuned to that story because I do think exactly what Russell said. If you're going to see, especially in Trump's economy, right? He's very pro small business, as he says, right?
Main Street versus Wall Street.
Right. And so if we don't start to see that take hold, you wonder how strong of a bull market this really is. Russell, you're the best, man. I got to tell you what, I appreciate you so much coming on here. Russell Rhoads, everybody. Follow him on X. We will put the link in the chat and hit that like button for my man, Russell. Russell, thank you so much.
Anytime, guys. I'm more than happy to come in.
So initial thoughts coming off of that, and maybe any last minute thoughts on this morning's data leading into non-farm payrolls, as really kind of everything has come right back to where it was when the number came out.
Yeah, I mean, again, those numbers aren't enough to really have a sustainable, meaningful impact on the market. So, we'll keep following this obviously every week. And if we start to see these numbers rise more, that's going to be a problem. I thought was really interesting, just going back to Russell. I thought he gave us some some good trade ideas, right?
Yeah, the straddles.
The straddles, yeah.
I've heard him talk about that a lot in the past. We don't have options here yet at NinjaTrader, but they're coming.
But, it's a good thing to watch to gauge what the volatility is going to be in the market the day before. You don't have to necessarily trade them, but to know what they're doing, can help you kind of gauge what the next day's action is going to be looking like.
Yeah, I saw some questions come in through chat. Like, what did he say? Go back and say that again. Remember, you can rewind and go back and watch that. Just don't leave us too far from where we are right now, and make sure you come back to what's up next is going to be with Pharm. So, Shai, again, thank you so much this morning.
Thank you.
Appreciate it. All right, everyone. Next up, my boy Pharm. Let's bring him in. Let's get him in here. The big dog is in the house. You get a haircut?
I did. Yeah, wife's leaving the country with the daughter, and tomorrow I'm gonna be gone for a couple of weeks. So gonna be the boys and I. So we all got nice and fresh, but we're not gonna look fresh when she gets back. That's for sure.
No, I mean, that's boy, pray for her when she comes back and sees the house and everything. I know, well, at least at least you're looking good before she goes to Europe. I remember going to the barber. I have two brothers, me, my dad, and my two brothers going into the barber, and then one at a time. That was just, it's like one of those experiences you never forget. It was so much fun going in there, and everyone knows I kind of like a haircut. I mean, it's pretty obvious about that, but yeah, and I do notice other people's haircuts. So, coming off of Russell Rhoads, a couple things. One is we had jobless claims this morning, a little bit of a dip, which was bought again. Oh my God, what a shocker! I can't believe it. And bond market continues to get bid. We've talked about this yesterday, and really every day, you and I, how we feel like it's made some sort of a decent low that's getting built upon, but really takes us to an interesting moment coming into tomorrow, Pharm, because you've now got a bond market that's come off the low. I think for the most part, you could attest that to obviously technicals, I think, was a big thing in terms of the way it kind of bounced and came back in the range. But the fact that I don't think that the market is predicting a great jobs number. I think it's kind of guessing it's going to be a little bit on the weaker end. And so I think that we're back to rates aren't going to go super high. We're back to potential more rate cuts. We'll see. Who knows? But that's kind of where we are, which leads to what we do tomorrow. Because if tomorrow comes in not as weak as we think or stronger than we think, boy, what does that do for the bond market? What does that do for equity? So I don't know what your thoughts are on that.
Yeah, I think we're in a spot right now where, look, stagflation and Goldilocks look remarkably similar, and the market will decide to see it as Goldilocks when it wants to bid, and the market will see it as stagflation when it wants to sell off. And right now, the market is positioned to remain higher at least. And so right now it's somewhat acting like we're in a Goldilocks situation. But it really is kind of the same thing. I don't think, if it's a little bit stronger than normal, I mean, if the market's in the mood to bid, it's going to bid. It's going to say, oh, hey, great, economy's doing fine, let's bid. And if it's softer than normal, it's going to be a situation where like, oh, hey, inflation's not going to be as much of a problem. Fed's going to cut, let's bid. So the market's going to do what the market's going to do. If I had to guess, I don't think the market is ready to sell off on a soft number, unless unemployment like really jumps. I don't think the market's ready to sell off hard and in any kind of a durable sell off. Hopefully I'm wrong, because I would love to have some volatility, because this is getting kind of gross. But I just don't feel like it's quite there yet. And a lot of that has to do with the fact that we've got the big disgusting bill, or whatever it's called, coming, and tax cuts and deregulation. So it's like, if it's a little bit soft here, and then we start running this hot, is it really likely to lead, to like a recession? And I feel like the market, at least based on the information we have now, is like, 0% chance of a recession, which probably means we're going to have a recession really soon, now that the market has completely priced it out.
Yep, no doubt. All right, let's go to the charts. I want to look at the bond market. I'm starting off with COT data again. I tell you what, the Jason Shapiro segment every Wednesday at 11 o'clock, I just love Jason because he gives a viewpoint that you just don't get out there, and I just love how I love the way he talks. I mean, he's a friend of mine, so I'm a little biased. I think he's a great guy, but he's just that old school gritty trader, and he looks at it and he's like, I just do what the market's telling me to do, right? He's very nonchalant about it. And what I find interesting right now is that you've got commercials and large speculators short, and they were the most short they were not too long ago. together, right? And now you start to see the non-reportings. I mean, they're long, which is kind of interesting there in the 30-year bond, and you're seeing a little bit of a squeeze here. I think in terms of, I mean, I don't think it was crowded by what Jason would say, but I still, nonetheless, making my own observations here. I look at it and go, they're taking it off each and every week when you have commercials and large speculators both the same way. And it's just something to take a look at. And I think go back when we look at the daily, and I talked about this. If you take an anchored VWAP to this low, the bonds have outperformed. I mean, really, from this low, Pharm, I mean, it's pretty interesting. They did not have one single close below the VWAP anchored from this big move lower. It stayed steadily above it. It's now 2 standard deviations above. It's more than 2 standard deviations above the VWAP. You're going back to prices that we haven't seen since way back in May. Well, that was just last month. I mean, so it's not that big of a deal. But back above 34, 821, 34 moving averages. Again, you have a bond market that has gone from relatively pretty weak to relatively pretty strong, and so even though in the scheme of things it's really not done much, and we have to keep that perspective as well. But it's interesting because coming into unemployment, I think that you've got a bond market that almost is expecting a weaker number, is the way I see it, because the bond market is a market that's going to be very reactive off of jobs data. Over the years that I've been doing this, back when I was in the floor at CME, the euros is where I would stand in the morning and watch what the euros were doing. We're talking about euro dollars, not the euro dollar, the market that doesn't exist anymore. Everyone looks at SOFR now, but that's where really the bigger action was. It was far less in S&P and NASDAQ. Obviously, in the electronic world, we moved quite a bit on unemployment, but nonetheless, where you're looking at rates is going to be where the real moves come. That have significant long-standing impacts. And so I look at the bond market and go, it's expecting a worse number, I think. And we'll see how that reacts and what that does to equity. So that's my first thought coming into tomorrow. The next thing is we go to the divergence that's continuing to happen in the tape. And I think it is part of the reason why we just cannot just get this rally going. I mean, you have a market. And so this is the Russell 2000. You got Russell reconstitution this month. Those of you that don't know what that is, the Russell automatically rebalances every month. I'm doing a couple podcasts this month with CME, CBOE, and with FTSE Russell on the Russell reconstitution. So maybe you catch those and give you a little deeper insight of what it is. But the Russell is different than you have in the NASDAQ and the S&P 500 when it comes to rebalancing. It's an automatic thing that rebalances the 1,000 and the 2,000, and there's a threshold to be into those markets. And so typically June is going to be a higher volume month for Russell futures, options, IWM across the board as you have this automatic rebalancing of stocks. And when you look at it right now, again, the Russell, even with the rebalancing coming up, which is it is fully transparent. The market is just really stagnant. I mean, it's just doing nothing. It can't. I mean, it's even more stagnant, I think, than S&P and NASDAQ if it's possible. And it's without it catching up. You see, again, today it's down 4 points. So it's down 0.25% versus, the S&P and NASDAQ are a little bit flat. It's always just playing a little bit weaker. Just tells us overall that the economy may not be as strong as it is. And I think that in order to have a healthy, sustainable rally in S&P and even NASDAQ, maybe not NASDAQ as much, you need the Russell to participate because I don't think this divergence can last forever. And so when I go to the S&P today, we talked about this yesterday. The Mentor Q numbers were great. I know Jimmy went over that this morning in his Edge report. And you can see even the options numbers are really tight. Yesterday was 6,000 and it was 59.75. And even when you go and probably look at today's levels, I mean, I would almost wonder, maybe Jimmy will put that in chat, if they've changed almost at all in terms of what the gamma levels are for today. And so I just feel like, man, we are in a wait and see hold mode coming into today or into tomorrow. Unlikely for a lot to happen. Overnight delta is negative 1,300, modestly to the sell side. I'd watch basically the 59.75 to 6,000 again. If it starts to get below there, this morning again, you had data take us down there. Couldn't do much. I wonder if we just had news come out. Maybe Shia.
What was that?
Something had to have happened. Something had to have happened. I don't have Shai on the headset with me, but I'm going to wait to see what happened. Something happened there. She will put that in chat and let me know what that was, but so it kind of changes things. So we'll wonder if that was a tweet or if something happened. Shai, let us know. Nonetheless, I think that now maybe we have a different day in terms of what we're thinking about here, Pharm. So maybe we'll go to your chart and see what volume profile looks like. I think that's probably going to be a better insight as to what's happening here.
That was definitely an interesting move. And yeah, obviously we're talking. So hopefully we get some clues on what's going on there. We'll see, if we sustain this break. It was kind of funny, the overnight situation where, this was just so disgusting. You had basically generational low at 73, and then we ticked down to 72. It's like the Scooby-Doo meme, right? Like, let's see what's behind this bid at 73. And then you unmask it, and it's the bid at 72. And then we get the data on NFP, and we unmask the bid at 72, and it's the bid at 71. It was kind of gross. So I'm curious to see what this is. But this is objectively bullish. We have a nice clean distribution that we have formed up here, breaking away from last week's volume. And so coming into today, looking at this, the only really way, when things are very obviously bullish and it's just buy every dip, I always ask, how could that change and what would that look like? And to me, once we've, formed out this distribution, really the only way to have anything bearish occur is to reject that distribution lower and stay lower, right? So come back, get sucked back into last week's volume, and then leave all of this trapped. You're not going to sell off until you have trapped inventory overhead. And so until or unless that happens, then to me, it's just buy dips. And even if we had, obviously it looks kind of shot now, but even if we had dipped down here into the 60s or even the 50s, and then just snapped right back up, that just kind of would have been a fantastic long. So definitely need to see what this news is that caused this move, because it was quite huge. But
China's Xi and Trump are holding a call. It's the Chinese state media. So we will wait to hear more on exactly what that is. Shai's been messaging me. There's no real details on it. I guess they hold a call.
Got it.
So
same recycled news for the 86th time, basically. Yeah. That's
what the market loves to do.
No, and that's fine. So if we're breaking away from this, this 59.87 that was here, that was the 3-week balance high. So objectively, that's a breakout if that sustains. Obviously we don't want to give back at this point, yesterday's high necessarily, but nothing bearish until or unless we've completely trapped this volume here. So until that happens, we're just going higher, and it's levels higher from there. Up to the 60-20s, I guess, would be the next spot. We had this overnight high, which we have now cleaned up with yet another extended hours high. So to even think about becoming meaningfully bearish, you'd ideally want to see a cash hours high get put in. Like tops form in one of two ways, or a swing high. And again, it's not because I'm bearish right now. It's just because, you buy dips until something changes. But, a swing high is going to form one of two ways. Either buyers exhaust out and the auction ends, basically, or there's some change in the information that you get. And so one of those two things needs to happen. And maybe the information is tomorrow when we get NFP, and that changes things, and this up move terminates because, we don't like the data. Or maybe it just happens sort of organically because buyers exhaust out. And to see something like that, you would want to see a cash hours high put in. Currently, you can see, we're leaving quite a bit of upper wick on this candle. Maybe traders realized how ridiculous they were bidding the same recycled news over and over again. But seeing something like this that rejects down, you'd want this during cash hours, and then just sell off for the rest of the day. Like that's what it would look like. So short of that, to me, it's buy dips. So we could end up opening on a true gap if we can sustain above yesterday's high, which was like 99, something like that. So if we're sustaining above yesterday's high, call it 97 to 99, then we're just going to be opening on a true gap up. If we reject back into yesterday's range, it gets just a little bit more interesting, and we could potentially rotate back across to these 87s and then back down. But really, to me, the biggest number here on ES is 59.87. Half big picture. And we'll see if we're ready to break away from that. We've got NFP tomorrow, and I felt coming into yesterday that maybe it didn't make sense to see a sustained breakout before NFP. It kind of tends to make sense for us to find a home into key data, and for right now, that home would be volume point of control for this week that is developing. It's entirely possible we break away to the upside. It's entirely possible we break away to the downside, but we generally will consolidate around a high volume node into like major key market moving data. And so it'll be interesting again to see like if this move sustains. The timing on these things is just terrible. Like put that out during cash hours and then we can see what people really think about it. So, I mean, we'll see what today comes in with, but yeah, same recycled news. We're going to bid. Look at Russell.
Yeah, exactly. I was going to mention that too. And it just goes to show you again, Pharm, how hungry the tape is for the slightest bit of good news to run higher. It doesn't even matter if it's good news or not. Any news that is not bearish, we'll call it, market takes and bids it. It just tells you that what's going on in this tape. Again, I go back to the Jason Shapiro talk. He talks a lot about this. When markets, because he is someone who looks at obviously overcrowded and positioning and looks for a contrarian trade when that trade is run out. And typically what you look for is in a market that's leveraged long, very long to, positioning, and good news can't take it higher. That's when you see a tape turning over. I think we all can relate to understanding that. You just don't have that in this tape right now. You actually don't even have a tape that's crowded whatsoever, really, in S&P and Russell to the long side. NASDAQ went over, it was modestly there, but it just goes to show you that, and look, you and I have talked about this every day. I mean, the tape it's looking bullish. It's just very hard to get in. We've had really strong consolidations, and it's amazing how different the tape really is from before. Was giving you opportunities to get in long or short every which way you wanted to be in. Now it's kind of like consolidation. Look at the small dip we had this morning. We go back to it, Pharm. It's like if you didn't buy that, you missed it in just a second.
Yeah.
So it is what it is. Again, going to be interesting to see if more headlines come out throughout the morning, and we will stay on top of that here on NinjaTrader Live throughout the chat to see exactly what's happening with his conversations with President Trump and Xi. But that is now going to be the focus, I think, for today, unfortunately. But let's take a look again inside the tape. Initial thoughts coming in to the open, barring no news, key levels that you look for trade potentials.
Yeah, so above, yesterday's high, again, call it 97 to 99, 57, 90, 59.97 to 59.99. If we sustain into the open above there, then we're opening on a true gap up. We haven't seen one of those for a while. And so bulls would like to see a gap and go that drives through, this overnight high. I am a little bit cautious of 60/20s. We'll see what that brings. And, I really wanted to see what was going to happen at 850 to 888 on NQ. We did wick through that and hit 900 or 898. But that's a nasty spot. I wanted to see what that was going to do for cash hours. And I kind of hate that it was wicked through because, again, you always want a cash hours high. But I am very cautious into 880s on NQ today. So, I have a hard time chasing rips. And like you said, I mean, if you missed that dip, you might have just missed the dip because we've been seeing just nothing but short time frame participants. You mentioned the Mentor Q levels, and I'm sure they're great every day. But what I have noticed is that those types of levels are extremely good when participation is light. And basically the options market intraday is driving things. They're good generally, but they're extremely good when participation is low. And that's what we've continued to see. And because of that, when participation is light, I'm extra cautious on rips and then just responsive on dips. So I'm not looking to chase this, but if we do open above yesterday's high, then we're just monitoring for retest to the overnight high. If we can't, and dealers get back in front of this, and I do believe we have a similar gamma exposure level right up in this range, 97 to 99 today, and we can't clear yesterday's high after this move, then things get a little bit more interesting, and maybe buyers are not ready to rip this just yet. Again, you can see this rotation back down to 87.5, and if you lose that, after this move, it starts to look a little bit gross, and we're going to have to ask ourselves if these 70s are going to bid again. And if they don't after this kind of move, kind of looks bad, to be honest. And if this was, again, if this was like a cash hours move, I would be getting pretty excited right about now. But as it is, it's overnight. I don't love it. Let's see what cash participants do. It seems like most days they've been buying the open. The bearish scenario here would be a failed gap and go. If we get back over yesterday's high, we drive into this overnight high and then just fade with a nasty excess high that looks like this. And that would kind of be the bearish scenario. But for me, now that we're back in yesterday's range, it's kind of a bad look, but it is noise. It's ETH, and it makes sense for me for us to balance further into NFP tomorrow. So I'm not really surprised that they didn't just keep this going on some silly news. But it's going to be all about these 70s, call it 74, 77. You got the overnight low, and then 87, 97 and 99. And then, let's talk about the overnight high. So if we can get a day where buyers are going to drive this through the overnight high and sustain that, then it's objectively a breakout. We're above the SPX breakout level, which is right around 78 ES. We're above the ES breakout level, which is 87.5. And it looks good. It's going to be hard to fade unless that whole thing is given back and it collapses. So those are some of the things that I'm looking for on these last minutes there.
Yep, and you have the wick higher and the wick lower, and now we're back in the range. And now, you have the unwinding of the positions on both sides of this, and it's going to be, it could end up being somewhat of a busy morning now. We'll have to wait and see. Again, as everyone puts in there too, we're all just focusing on the price action, but when you have Trump talking about China, the tape is super sensitive to that. That's just the bottom line. Make sure your working stops, everybody, regardless of what direction you're playing today. Make sure your stops are in, because it's just part of what doing business in this market right now. Pharm, thank you so much. Glad to have you here as usual. We do this every Monday through Thursday from 8:30-ish to 9. And have a great day and trade well. And, we'll be seeing you, of course, what Pharm does on Twitter. Go follow Pharm on X. Check out what he's doing on his Substack. And we'll be seeing you on Monday. Have a great weekend.
We'll see you Monday, Deli.
All right, everyone. Next up, we are bringing in Tanya. Tanya, you were in the chat. You were like, whoa, what just happened? And we were all like searching, and Shai had put out there. We all know now it's President Trump is on a call with Xi. We don't know if that call is still happening or what ultimately is happening here. But nonetheless, we are in a situation where, at this point, we're now held by kind of what comes out from a tweet for a post. But as we talk about, we got to focus on price action. Maybe we go right to the charts with you this morning. Initial thoughts off of what that move did to the structure and what you'll be looking at for the morning.
Sure, yeah, that was a definitely very sudden move to the upside at 850 there, and I was like, huh. I was searching for the news too, so shout out to Shai for providing that in the chat. So we hit my buy side target of there of last week's high here. And I'm not really loving the reaction. We're wicking that. We're back in the range. So if we're going to go with the state of trend of things, I think that there's a lot of sell side here that's been left untapped from yesterday we paused. We didn't get back into these 4-hour fair value gaps here. I think that likely that's going to get ran on NFP if it's not going to happen today. I'm going to be cautious with my trades today. I don't really love trading the day before NFP is my least favorite day to trade, because it's like everyone feels like everyone's waiting for tomorrow, and there's probably not going to be a lot of movement. So and then this kind of confirms that these wicks at the highs, you're not seeing a lot of trending action the past couple of days here. If you're even looking at the 4-hour, yesterday during that day, that was a pretty nasty day. We look at these crazy wicks. You won't have any closures or follow through on the upside or the downside, and that's what basically I look at on the 4-hour to see. So to get my grasp on the market and to see if there's a direction, and there's not really. You're having those fast, just hitting one level or even not even a level and then reversing. So I look at the hourly here. Yesterday. Right here at 9. I mean, I was anticipating more upside than after that. And I remember holding on to a long there and pulling up my stop. But so then I got stopped out, actually, like small loss. But yeah, we had like literally no follow through. And then after trying a small position again, longs, like we had no follow through. So I just had to leave the computer yesterday because I was like, yeah, this is not going to go anywhere. And we didn't. So here we are today. I don't love how large this wick is at all, because then it doesn't really mean that we're gonna have, we can retrace into this wick, we can retrace halfway through this wick or even near the top again, or do whatever. Honestly, it's not looking like we're having super sharp reversals. I'd prefer more follow through to the downside before I take more anything really short, but I do think that we could go, I think that would be healthy for us to retrace into this, at least here. I mean, because we didn't even get down into here. 21,630s on NASDAQ, and what is it on ES? There's huge gaps, you know. Let's see. I'm just gonna highlight the upper one, but that's even in a premium, so we could dig into this order block too. But here, like minimum 59.68 for ES. So I'm just based on that reaction, I'm more bearish than bullish today. But I'm also more kind of like, I think it might be a F around and find out type market because of what we've seen yesterday, and tomorrow's NFP. So what do you think about that, Deli?
Yeah, I mean, a couple things to note too as well. You saw the bond market and the gold market both pull back now. Not that that's pertaining too much to what you're doing, but I thought that was interesting that those markets went down on that news and equities went up. So I think that, watch those markets as an unwind of a markets that have had some stronger trends and they're reverting back in. What does that ultimately do to equities? It's just some awareness I'm really kind of bringing to the table. But yeah, I look at it and go, when the news takes us out of a range, Tanya, and we come right back in, and the news is really not news. I mean, let's face it, this is really not news.
Like
a
a
friend of
nothing
mine,
burger.
he talked to me. Yeah, a friend of mine told me one time, he's like, I always watch for what he calls stupid news. And what he means by that is that if the market gets driven by something that really makes no sense, you watch to see how the market positioning or something happened within that, and if that move starts to unwind. And so, to me, I think it was potentially a stupid reaction. I mean, who knows? I mean, anytime equities go higher and I say it's stupid, I get cracked in the head. But nonetheless, I do agree when I look at the price action itself, it's like, it's going off of what you said. I mean, I'm right in line with what you're talking about today. So, I mean, I guess maybe the one thing I want to ask you is anything you're noticing difference between S&P and NASDAQ. Which one would you come in and trade today on the open? Let's just say we don't hear any more from President Trump and Xi, which actually Shai said that according to Chinese state media, the White House did not immediately respond to a request for comment. So that could come out at some point. S&P or NASDAQ, which one are you leaning more towards?
That's interesting. So you're saying like that could even be like fake news or something, just like a random headline just to take liquidity. It's possible. Yeah, with S&P and NASDAQ, I'm looking at the 4-hour. Right here, actually was interested to pull up YM, and we'll get back to that. But I mean, I think YM is interesting because we didn't take out previous week high there. And like I said, with the indices, like with ES and NASDAQ being kind of slow some days, I mean, I'm looking to broaden my horizons. Maybe I'll start even trading the Dow in the future. We didn't hit last week's high for the Dow. So I'll be watching even the Dow to see if like, since it wicked this and it's like way lower in this range than NQ is. So I would rather maybe I'll find a short in the Dow today. I don't know. We'll see. But for the S&P and the NASDAQ, I mean, I think S&P has been just slightly just slower of a grind up. It's kind of weird actually, because I've been noting this during my streams all the time. I like to see during the session which one is stronger and which one is weaker. And we've been getting a lot recently that just in the middle of the session, like at the beginning of the session, S&P would be stronger, and then after the 10 a.m. news, then it starts being weaker and NASDAQ picks up. So what I get from that is that there's a lot of rotation happening intraday, and there's not a lot of like clear trend or easy money to be made. That being said, here, ES on the left and NQ on the right. I like ES better a little bit because I think these lows are a bit more equal if I'm going to short it. It is slightly weaker, but they're pretty much on basically the same wavelength. What I think is interesting today is, though, that YM didn't take out this high. So maybe that will be the start of the move lower. And I'll have to, and that being said, if we start seeing during the open now like the rotation again, where now I've seen this happen so many times actually recently, I have to mention it. It's like, oh, if ES leaves a high intact and it starts out being weaker, then a lot of times that we're actually seeing, we're not seeing a reversal. We're seeing now more flows going into ES and then start becoming stronger to go for that high later on. So if I start seeing like YM today is actually way stronger than NASDAQ, then that could be what's happening instead of any reversal. Like YM could just be going for last week's this high, this 4 hour high out here. We didn't even hit this high on actually YM last week's high, I don't think. Just interesting there. Yeah. So yeah, I mean, today is really my least favorite day to trade. I've been saying that. I don't really like trading the day before NFP. Because I think that a lot that can happen is building up liquidity, kind of like yesterday, where we get close to a low or we get close to a high, and then we just pause and we reverse, and you can't even time that too easily because it's just generating liquidity for tomorrow's NFP. Which I think, honestly, if I don't trade NFP, like I don't go into it with any options positions typically, but I'd probably be betting that we'd come back into this area. Yeah, YM did not hit last week's high. So yeah, I mean, like even yesterday I was looking at crude oil and gold because the markets were so boring during the day. It was just a lot, and there was like literally nothing to do. So this is the time to refine your edge and refine your patience, but also you could also start looking at monitoring other markets and seeing how they move and getting a feel for that. I'm not going just diving straight in. I'm just journaling and noting how they move because every asset moves in a different way. So yeah, that's what's in store for me the day before NFP. I don't want to be in a FAFO market. I'm going to be careful. I don't want to F around and find out today. So definitely if I do take a trade, I'm taking half size. It's just not particularly worth it with this kind of action. And of course, I'm going to really try to time my trades where I'm timing reversals near the extremes of the ranges rather than going for an entry at the middle of the range or a continuation.
Few things.
So, yeah.
One is I love how you're talking about trading half size going into NFP. I think it's important. I think you have a headline driven market now. It's already setting the tone pre-market that we could see more coming from President Trump, the administration, or if it's not from them, it's from other people. So you're going to see potential tweet storms and overreactions to the market. Make sure everyone keep working your stops. Put your stops in right away. Work bracket orders. Do what you got to do to protect yourself. Stay in the game. Also want to talk about you trading the dirty 30. That could be. I would love the day where we come in and say you start trading the dirty 30. That will be something. But you're spot on. I love the way you're approaching it because you're journaling it, and you know that even though it's an index, they all have different personalities. Anybody who's been watching the indexes for a period of time, you know that the Russell has a personality. You know that the Dow has a personality. You know what the S&P does and the NASDAQ. And that's why many people like you choose to trade the NASDAQ and the S&P. You've developed relationships with them. Getting into Russell or Dow, they do move differently. They've got different tick sizes, different ranges, so it's just getting accustomed to it. So again, appreciate everything that you bring to the table to us every morning. Tanya, Monday through Thursday, 9 to 9:15. And of course, Tanya streams with us all day on Monday. Tanya, have a great Thursday. I know you may not be trading or trading at least smaller going into NFP. So if not, have a great stream, have a great day, and have a great NFP tomorrow. So we'll probably see you in chat.
Awesome. Great. Have a great day, everyone. Good luck and good trading.
All right, everybody. Thursday. Markets have been boxed in. Is that a leading indicator to trading boxes? That's right. Today is Thursday. Next up, Trading the Open with Chris, Trading Boxes. Good morning. How are you doing?
Hey, Daly. Good morning. How's it going with you?
Going great. Slow morning-ish that turned into somewhat of a busy morning-ish. We will see. Given everybody as we are now entering top of the hour, or actually it's 9:15 already. I'm thinking it's 9 o'clock. Boy, the mornings are moving quickly. President Xi was on the phone with President Trump, so it appears so. We're not sure. We have not heard the White House to respond to a request for comment. We know that is going to be whether or not it happened or didn't happen, or what was said or what wasn't said. Bottom line is this morning, that's what moved the markets initially. Everyone be on the alert. As I just said with Tanya, make sure you're working your stops. Understand that news is going to be flowing. That's the world we live in right now. I think it's extremely important. And coming into a non-farm payroll tomorrow, I think it even brings more a heightened sense of what comes of today. It leads the kind of the tone into what markets may react off of tomorrow. So thoughts this morning on what you've seen in the markets, Christian?
Yeah, it's been a little bit of a tough tape. In these areas, you usually want to focus on sideways to higher structures. It sort of serves you better knowing that we're going to get these environments, knowing that we've just had a massive move and that news are around the corner. We've had earnings as well. We're still waiting on earnings from ABGO today. And typically, this is what I like to call a low VIX sort of uptrend, is where so many traders are frustrated with the price action, where yesterday was a perfect example of that. It moves sideways. It has a little dip, maybe in the first 20, 30 minutes of the open. We saw one just now, and then reverts back up. That's pretty much the action that I've sort of come to expect when we are combining all these uncertainties, earnings, news, Trump tweets, anything like that. It's a very sticky tape, and you just have to adapt and make sure you create a playbook to allow you to at least survive that environment until your A+ environment returns, and then you can move the needle like you guys and Tanya were talking about, bringing down your size and then waiting, minimal trading, and then once it returns, hey, go back, press on it, and do what you need to do.
Stay in the game. I talk about it constantly. This morning, let's stay in the moment. We had this move higher. Did it change anything in the structure? I know you like to prepare well in advance for the day. You saw that move happen. Now you come in 9:18, getting ready for the open. What's the thought process?
Yeah, so let me go into the plan for today. I think I've been pretty bullish for the last month. I've said it on Twitter. I've said it on here. Ever since we got that April failed breakdown, it's just been focusing on longs, failed breakdowns, and just boxes that are consolidation sideways. And then we can continue higher. So what has taken place? We were consolidating for like 2 weeks. We attempted a breakout in the last day and a half. And now we're consolidating near the highs, right on the prior week highs in both ES and NQ. ES has a little bit of a different structure up here than NQ. We're sort of consolidating now in what I like to call a 50 EMA wedge, which is a contraction with a rising 50 EMA, telling you that the previous breakout trend this is over, and it's now moving sideways, giving this resting period before, if we continue holding, we can break out higher. If not, we can break down lower. But again, going back to the environment that we're in, just because we're breaking down out of a lower time frame structure, it doesn't mean, hey, let's get bearish, let's go ahead and short to zero. All we're doing is we're going to keep coming back into areas of support that have proven to be resistance in the past. And obviously, we can sort of say, hey, on the first back test of that, we're going to see some sort of reaction. Maybe we can bounce. And if so, maybe we can reverse back up and push out higher. So these are my scenarios. If we can continue holding sideways, we can push out form acceptance into prior week highs. I think we can see 6,044 in ES. I have the possibility of a failed breakdown, which we might have seen already in the pre-market. If we do move lower below 59.70s, we can backtest this 59.30s area, which was the breakout of this prior box, and bounce acceptance there. And we push that into 58.90s, 58.80s. I know that that number has been discussed quite a lot in the last 2 weeks. And that's the bull bear zone of this prior consolidation. For NQ, if we can continue to hold here as well, this one still, due to the strength in software and semis, we're still seeing this higher, 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 low structure. It has not transferred over to the sideways consolidation. So maybe there's a chance that we get that. Maybe we can test prior day low, bounce back up and consolidate. If not, we really need to see some sort of acceptance between 800 to this 900 zone, prior week high, and push up higher. If we fail to hold prior day low, we can back test 500s, where again, that's literally back testing the box of consolidation that we had. I do expect buyers to show up. If not, hey, we form acceptance and we traverse back down all the way to NQ's bull bear zone line at 300, which is similar to that 58.80s, 58.90s in NQ. That's sort of my higher time frame structure. I'll quickly dive into my hourly plan for today. We are in a sideways structure overnight. In ES, we dipped down below London's low, failed breakdown like I discussed just a bit ago, and we're bouncing back up. We're still under this heavy resistance at 59.93, 6,000. So what do I need to see for my approach is some sort of acceptance, maybe back test, just a lot more chop up here. But the chop up here will sort of structure, or that will move into a structure that forms acceptance. And then later on today can set up a move up into 60.18. If we hold that, obviously that's 60.44, 43 target. If we are unable to hold this 59.68, then we can move lower into the back test of that box breakout, 59.30s, 59.43, where we can bounce or hold and push lower. A little bit of the same story for NQ, but again, that's stronger. I think at this point for NQ, what we want to see is scenario 1.2, which is acceptance, consolidation up here, failure to move back below the 760 zone, right? We want to see rejection. We want to see buyers step up and drive it back up. If we can do that, that will be data that I can use to then say, okay, we are forming acceptance and we can break out higher. If we don't do that, then sure, let's come back down to prior day low, 600, 650 area, where we can look for a bounce. If we form acceptance down there, we will pretty much move up all the way back down to 450s and back test this box area. That is pretty much my plan. I know you guys have discussed a little bit of the same. So I'm glad we align on many things.
Yeah, I love it. Well, Chris, it's hard when the market is not doing much. We probably all have the same numbers right now. I mean, market has been in a consolidation. As you know, we're all kind of just looking at the same thing that we've seen over the last couple of weeks. It's been pretty tight. And nonetheless, really love the way that you approach it. Again, I say this all the time to everybody when they're listening to the show. The way that you draw things out helps instill it in your mind. So when you get there, you're prepared to execute. And the bottom line, it always comes down to the execution, which I absolutely remind everybody about each and every week. When you're watching these traders and Trade the Open live, watch the context and nuance of how they execute in the moment, because this is an in-the-moment business. And all the planning and everything you do is great on paper. But when you get there, watch how they execute. Watch how they're putting their stops in. Watch how they're, trading the tape that's in front of them. That all has came from their preparation. Chris, we'll be with you in chat throughout the morning. Everybody hit the like button for my brother Chris. Make sure you go and follow him on what he's doing on X. He's my guy. I love watching you each and every week, and I appreciate you being here with us.
Likewise, Anthony. You take care, right? You enjoy your weekend.
You as well. See you, everybody.
All right, gang. How's everybody doing? Hi, Tracy. Hey, Gaba. Hey, Juan. Good to see you. So we saw a new spike after we saw a failed breakdown of overnight lows, which I just discussed. And, you know, I was writing the morning plan and I was looking at this and I was considering, hey, that's going to be a failed breakdown. I'm going to look to get long. Would have been great, right? This, you guys know my 9 MA reversal setup. It would have hit 2R, but it was a new spike, right? So I was not sure if we were going to move a bit lower, and so I had no problem waiting. But now that it's taken place, we're seeing a little bit of a bullish structure here. And let me bring my other charts. If we can hold up here, we can pretty much form that acceptance that I'm talking about and then break out higher. You know, I've said this with my own private group. It's been choppy. Try not to overtrade. Focus on your A+ setups. Bring down your size if you must. And just wait for the trade to come to you, right? Like you guys know me. I think by now it's been, gosh, 3 months. I think by now you guys know that, hey, I'm looking for reversals. I'm looking around failed breakdowns or into these darker zones. For a continuation setup, I'm looking for wedging structure, which is pretty much what we're getting here. If we're not getting any either of those, then there's really no trade for me, right? So let's see how we open. We have 4 minutes for the open. I want to see if we can hold this gap up here that we're experiencing in the market just a bit. Well, Qs are gapping up to new highs and SPYs are gapping up to that yesterday's resistance. But the good thing is that I still have that swing long that I've kept talking about. So I was long from 410. What's my red line? These are resistance zones. OMID. The lighter ones are softer resistance zones, and the darker ones are will sort of create the environment. They are, you know, anything above it, you sort of have a bullish bias because technically we're above a strong area of resistance and it's now becoming support. Anything below it, then it sort of is a magnet to drop to the next darker zone. Oh, that's VWAP. Oh, the line, not the zone, right? How do you not like the colors? These colors are pretty great. You don't have to like them. All right, so let's see what we get here into the open. We're consolidating pretty well on the 5 minute. On the 2 minute, we have a wedge. I think we can see a drive higher. Ideally, but you know, even if we can see a potential push higher, I need acceptance up here. ES is right under that resistance area. I have no problem missing this possible initial breakout, right? Something like this. If that starts to happen, I will look to take a long. Maybe wait to see if there's some sort of consolidation here, and then look to push out higher. But because we are at resistance, I still think that there's a chance that we could consolidate and sort of stay choppy. Yeah, colors are great. Let's see what's going on. By the way, guys, let me share this ES structure. So I'm going to share the daily chart while we have a minute till the open. Let's see how the open goes. All right, we're attempting higher here. This is sort of our wedge. You know, I might consider it. NQ stronger. ES is super weak. I'm gonna wait. I'm gonna be a little bit more patient. I'm gonna wait to see how this unfolds and see if we can confirm acceptance up here. ES seeing some selling pressure. Let's see if it's from cyclicals. Yeah, cyclicals are a bit weak at the moment. Tag is really what's holding this up. SPY's red on the day. Q's red on the day. All right, let's see what takes place here. Yeah, Jose, a divergence between the indices are a pretty good indication of a reversal setting up. So that's one thing that I like to see in a reversal setup. Let me bring over this plan here. So you can see scenario one that I have for both is a little bit of chop in this overnight consolidation. We're pretty much boxed in from this 59.98 to 59.70s. Where is my box? Right here. So what can take place? Well, mean reversion inside this consolidation, right? For you scalpers, short 96, buy 72s, sure. But that's not my approach. I need to wait for some sort of acceptance here, like in this scenario, 1.2, and in scenario 2, the sideways consolidation into support or into resistance to help me then look for directional moves. If we stay in this range, then we're probably going to be in a chop, and I'm not looking to engage. NQ is a little bit stronger. So if we can form this structure here and consolidate above 760s and correct sideways, that will give you more confirmation that it wants to break out and we can push out. But I'm still looking for higher unless, you know, we really confirm that we're not able to hold. We need confirmation. We need data to confirm that for us. And so far, the data has not confirmed that. We can be as bearish as we want, but technicals and the data that those technicals provide has not shown us that it is ready to break lower. That may take place today, but we'll see. You know, this is trapping Thursdays. We know that there are a lot of traps. The market loves these days for me. And we just have to wait and see, guys. All right. It's all about being patient. Yesterday was a choppy day. I focused on buying support. And maybe that takes place here today. But let's not forget to like the stream, guys. Hey, Faina, good to see you. Like it up, guys. Let's get to 200. Support the crew. We came off a bullish daily FVG. You anticipate higher. Yeah, you know, that this consolidation sideways can be that push higher. We have Amazon that's breaking out. That's I'm swing long that. My bias starts on the weekly, believe it or not. I start from the weekly. And I only do that because I swing trade, so I understand the daily and the weekly structure very well. So my buy starts on the weekly, and then that sort of steps into the daily structure. The daily confirms where, on a week-to-week basis, who has the momentum, right? In April, we saw that big failed breakdown. That failed breakdown was a internal reversal of the weekly bounce that we're seeing. Ever since then, we've been in a daily 9MA uptrend. So that tells me if we're in a daily 9MA uptrend, buy pullbacks, buy consolidations into resistance that are breaking out higher, because we're in an uptrend, right? We have not confirmed lower. So until that pullback ends, I need to continue applying the same. What defines the edge is a combination of trend structure and my entry rules. The daily and the 4 hour, the hourly is the trade plan. I'm an hourly, I like to call myself an hourly trader with 2 and 5 minute entry setups or entry models, whatever you want to call it. So I'm looking to participate in hourly trends. Well, I've developed entry models on the 2 and the 5 minute to help me participate in those. If we don't have an hourly trend, then there's really, you can imagine, not much for me to participate in. So I'm just going to be patient here and wait. I do have to open up something else. I'll do that in the meantime. I'm going to wait and see what we get here. Oh, why? I didn't even see this. All right, so it's just chopping sideways. That, okay. See the rest. Some software's coming down a bit. Amazon super strong. So all InQ is doing right now is backtesting the 760 zone that I brought up in my plan. No, I can't short that. We're just backtesting, you know, what was resistance and can possibly support. In order for me to attempt a breakdown trade, I need to see acceptance here. ES is definitely weaker, but financials are weaker, cyclicals are weaker. I've been trying to box this thing on his hands. I am. Look, if this breaks down, cool. All we're doing is coming down to support. So my main objective is to look for those support areas to buy. So the first one here was 59.68 in ES, and we're coming down to it. I want to see if we can form some sort of reversal structure that I look to activate, right? If we form acceptance down here, a sideways structure, then I know we're not reversing back up, and I would maybe possibly participate in a breakdown. But again, we are in a bullish environment, so at the moment I have to think of these sort of moves lower as pullbacks into support until I get confirmation that it's not. Oh, MK, I am the wrong person for that. On crypto and alts, yeah, I'm not I don't trade crypto. All I trade is Bitcoin, Ethereum. That's it. All right, so let's see what sort of reaction we get here. I am definitely interested in a failed breakdown reversal. Let's see if we can set up that structure here. Let me look at other charts. You sold, you got short. How do you avoid failed breakups or downs during acceptance? Well, you need a specific structure to confirm acceptance. I need 30 minutes to an hour of sideways into support to confirm we're not bouncing from that, right? It's a time thing. And then I need a specific structure, which is a wedge. Here, we're potentially setting up a bounce. So I need to be open to that idea since we are in a sideways to higher structure. So let's see what can set up here. We are bouncing to create the first lower high, which is lower low, lower high. If we fail to produce a new low, then we can maybe set up a reversal back up. So let's see how that looks. And like sometimes I'll get it wrong, you know, sometimes I'll end up buying a reversal that then turns into acceptance and stops me out. And that's just okay. It's not going to be perfect. SPYs are into prior day low. Qs are much stronger. Let's see, this is 794. This is a 60-point spread between my possible entry and stop, which means I need to do half sides because my average stop is 30 points. Let's see how we unfold here. If we fail to produce a new low, and maybe a higher low, and then sort of reclaim that last lower high, then there's a possibility that we can see a reversal. And that's something I am interested in, but I need to Hey, Pax, morning. What part of Mexico I'm from? Guadalajara. All right, I need to do a little bit of this. Let's see what other stuff is doing. I'm gonna look to let me see. Do we have any? We don't have any lows or divergences setting up. I am considering a reversal here. If we can reclaim that lower high. So far, we're holding. We're not seeing much. If we break lower, I need acceptance. I need that consolidation. So I'm not really in a rush to get long something or get short. So it looks like we're going to move to new lows. So let's see if we do make those new lows, can we create some sort of divergence in RSI or the delta? Yes, super weak. We do have a RSI divergence in ES as it attempts to break down below first support here at 59.68. NQ has an RSI divergence as well. So let's just wait and see if we can either set up some sort of reversal structure to get long. If not, I need to wait for a sideways structure, which is a wedge. And then if that then breaks lower, then I have a better idea, more data, more confirmation that we are going to create a sustainable downtrend. Keyword sustainable. That is what will allow me to participate in an hourly trend. For that, I need contraction to create the energy for a sustainable move, right? I cannot short a 3-candle consolidation here because that's not it. That's not my entry setup. But it looks like we're failing here. ES does look really weak. Maybe we do get that pullback. And I have no FOMO in potentially missing a breakdown here. I don't watch any soccer, so I'm not a Chivas fan. How many screens do I have? I have 3 ultra wide monitors, which I split in half. So, 336 or 37-inch wide. So you split that by half, you can say I have 6 monitors. All right, let's see if we can. So this is really where it gets interesting. We have RSI divergence here on ES and NQ. Delta, no divergence. It's moving lower. So 2 things can happen here. We do set up a reversal. This is a divergence into these lows in both ES and NQ. Or we hold here at these lows, fail to push back up, form some sort of consolidation, and then break lower. If that happens, then that's something that I can look and see if I want to participate in. ES down to 49.50. Yeah, let's see if we can I'll look to participate in that move if we can packs, if we can hold here, create a structure that I know to help me participate in that. Yeah, I have the same EMAs for swing and intraday trading. Why? Because it's the same system. Trend structure moves the same whether it's on a lower time frame or on a larger time frame. That does not change. So the EMAs remain the same for me. So let's see. All right, we're bouncing to create that second lower high. Let me delete some of these. Lower low, lower high, lower low, lower high. NQ, lower low. Oh, lower low, lower high, lower low, or lower high, lower low, lower high. From here, we will sort of have a better idea of what we can see, what we can get. And then from here, do we create a wedge structure, that acceptance structure, and then set up the breakdown, or is this going to be a failed breakdown? Does feel like lower though. But again, it's all we're doing. We just NQ is so strong. We haven't really broken anything. We're just back into yesterday's price action. Yeah, Matt, fractal. What is the one trick to using the EMAs, SMAs, EMAs? They allow you to understand the trend sequence that the market, not we, but the market has. The market has a lower low, lower high, higher low, higher high sequence, and the SMAs, EMAs allow you to really capture that really well. That's the pretty much the only reason I have them. My studies and my data tell me where the higher low is. The candle count matters as well, what type of consolidation we're getting. A typical 9 MA consolidation is 4 to 6 candles. That's a simple continuation structure. A 8 to 12 candle consolidation in a 9 MA up or downtrend is what I like to call a 9 MA NTIT, no trend in time, which means it's a short consolidation inside the current trend. The trend is still alive. And that tells you that there's building up energy for a new potential move. This is a structure that we had on the daily in the beginning of May. The beginning of May, we consolidated. That was the first consolidation after that April reversal. And then what ended up breaking us out of that was the Sunday news that we gapped up on, I can't remember, potential China deal. But that was a perfect example of what a 9 MA no trend in time is. All right, let's see if we can really break lower. If not, there's a chance that we can push back up. The lower high is currently here. ES is much weaker. We do have RSI divergence. we break back up, we would essentially be breaking up back above this. So let me see if that triggers. And I would like to participate in a reversal if we get. See, here's my entry. My stop goes at the lows. So that means I need to move my stop a little bit higher. No, what was it? 6, right? No. All right, so let's see if we can set up some sort of reversal. If we then form acceptance down here, then I will look to short. You deserve to have all the time highs likes. Hey, thanks, Jose. Yeah, let's get those likes up, guys. If we can't hold here, then we're probably going to form acceptance. But for that, I need my wedge structure here, right? I need something like this. And then set up a short. Pretty scary candle on the hourly. I mean, this is all I did yesterday with 3 trades. I just bought pullbacks into support. It is a little bit more choppy today. Well, it was very choppy yesterday, but the structure here at the open is definitely weaker. And he was trying to put up a fight. ES is weak. Yeah, I think we're gonna get down to that PAX level. If so, I'll probably take a stop. We got a 5-minute lower high there. Maybe this is a move lower here. There was no acceptance though, so I can't really participate on a short unless we form that here. So I'm okay getting stopped out in this. If we do form acceptance, then I'll look to participate. Nice, Faina. Make all the money. I need to look at my. Let's see what takes place here. It's a mixed market at the moment. Tech is doing well. Some tech, Apple's bet down. Amazon is really pushing up. We have Meta at highs. What's Nvidia doing? Nvidia's hanging out at highs. Broadcom hanging out at highs. So it's a mixed market at the moment. Software is strong. You have Spotify at highs. You have TSM consolidating at highs. So it's a mixed market, and unless we form some acceptance, then I'm sort of still keeping an eye out on a bullish structure. Let's get those likes up, guys. Oh, we're at 245. That's awesome. Yeah, AVGO earnings after the market. I think the market's going to wait on that. We're going to wait on news tomorrow. So we're sort of waiting in this environment. Then to me, we can sort of replay what took place yesterday. But we'll see. All right, let's see if we can set up a bounce here. If not, we might be forming our wedge structure to then set up a breakdown. And then that's something that I can then look to participate in. You were targeting 59.60. Nice. You made your points. If this potential bounce attempt gets rejected, then we know that we are probably going to be attempting a push lower. So let's see how we do. ES is still weak. It's still in this lower low, lower high sequence. Lower low, lower high, second lower low, second lower high, third lower low. We have divergences. Can we set up a bounce into the 20, 50 EMA cloud? And then from there, start a 50 EMA consolidation? If so, then we'll have the structure that I'm looking for. That will then allow me to join on a potential breakdown or break up. So push back up or that breakdown lower. Don't want that. Something similar for NQ. Whoa. Although I will say, NQ is stronger, and we just have to wait and see what unfolds. If we're unable to bounce and we get rejected, then we can look for a short. I'm going to keep an eye on Qs here, see what unfolds. So far on the 5-minute, we're in a 9 EMA consolidation. Here we're consolidating as the yellow moving average. The 9 MA is coming down. So once that comes down, we'll have a better idea of what we might get. $7.28 line in sand. Where is that? I don't have anything there. Target is 78. Yeah, I have a zone at 80. All right, so here's our bounce attempt. Let's see if we can push back up. We need to really break back above this 60 zone, 760, and reclaim that. We need to reclaim it and then be able to sort of do something like this. We can reclaim it, hold it, right? Then push up higher. If not, then this is maybe just resistance still, and we can reject back down. We'll see. It's just about being patient here. Not much is happening. Currently working in our favor, but we still need to wait for more data to really confirm, hey, can we reclaim the 760 zones? NQ's already trying to reclaim the 5968, which, if you guys remember, was my initial scenario here. Scenario one, we dip lower, we move below prior day low, and then reverse back up. Scenario one in NQ, let me move this, was for us to move lower, revert back up to 780s, 800s, and then see what happens. If we fail to do that and we form acceptance like this, then that's something that I can then look to short. So let's see what happens. Need Apple to jump back up. Need Amazon to continue leading. But so far, Amazon looks great. Meta looks great. NVIDIA is just hanging around. So just chop, a little bit of sideways action. Would you say you need a different approach, strategy for trading different future sessions since they tend to have less volume? I'll be honest, I don't look at volume at all. It plays no part in my futures trading. Why? Because we have options in no volume, right? And I'm not gonna trade, I'm not gonna buy an uptrend because there's no volume. If my rules are met, right, I'm gonna buy it. If my setup triggers, I'm gonna buy it. What I'll just follow the 9 MA trend out of that sort of setup. Where's the button? All right, so it looks like we're gonna get some rejection here. If we can hold down here, then I will look to see if we can maybe possibly participate in a short. But in an uptrend and in environments like this, I hardly participate in shorts. I will let price come down to support and then buy that. But yeah, it looks like we're gonna get some rejection. Let me delete all of this. Yesterday was a little bit more bullish at the open, so maybe we do now push lower. Looks like I will take a stop here. What do we have on the hourly? All right, so here's what I'm looking for here. If we can, if this gets rejected and starts to move lower, then I will consider a short. If we can reclaim the 2-minute 9 MA here and push back up, then that'll be a little bit of a better structure. What I don't want to do is overtrade. So I need to be patient here. Okay, so this is kind of good. This is what we want to see. We just need to wait and see now if we reject it or hold it. But you know, a little bit of a choppy morning. We know Thursdays are like this for me. Not much to do. We're heading to 60-40. Maybe what needs to happen here is we need to reject. If we can reject from here, then there's a higher probability now that we are going to push to new lows. If we do not reject and we, oh, that's not what I want, and we reclaim this structure, then we're going to get a reversal. You see how like you need to wait for these things to happen if then else? And that only comes from understanding the structure around your entries. You need to understand every variation of your entry rules to then create a library around that to then help you understand in the future in real time what's taking place, right? So you have confidence in what's happening instead of having an uncertainty and that getting in the way of you executing or staying in a trade, even though you may be down, right? Because at the end of the day, look, this trade is one out of thousands. Yesterday I had 3 winning trades in this choppy environment. All I kept doing was a similar trade, buying failed breakdowns. Now this one may fail. Okay, if it fails, it's my first one out of 4 trades. I only have 2 trade setups, 2 entry models, a mean reversion, which is this, what you're seeing, and then a directional one, which is the wedge structure. And then that's it. Yeah, failed breakdowns are money. Those are most of my trades. I wait for my entry rules to trigger and I take them. So let's see if we can sort of reclaim here. If not, we have a better idea that a short will set up. But you have to remember, guys, you know, the market's going to have all these moves. You just need to wait for all these moves to meet your rules. There will be a certain time in the day where your rules will be met, and that's what you execute on. Everything else, it's like when you're getting on the freeway, you have a certain destination in place. You're going to get in one entry, you're going to get out one exit. The other cars are doing whatever they want to do, right? You need to have your objective in place. Yeah, we're sort of stuck down here. We finally break down. And clarify what these green zones levels represent. They are support and resistance. The lighter ones are sort of pit stops on the way to the darker ones. The darker ones are what create the environment. They allow me to understand who's in control at the moment. Do we have bears in control or sellers? I don't like using bears and bulls. It's sellers in control or buyers. And then they also serve as magnets where I am looking to trade from one zone to another. Since my trade entry is now sitting below the cloud, does that change how you look at the trade's potential? Yes and no. It'll depend on the overall structure. One second here. It'll depend on the overall structure. Let me delete this at the moment so we can see better. It'll depend on the overall structure of the higher time frames. That's what will really dictate the. If we can break above this here, what's going on here? Then we can push up. If not, we might continue lower. Banks are bouncing. Looks like we're gonna break down. But it's just sideways at the moment, guys. I might flip to the short side here, only because I do want to participate in a short, and I think we are gonna get it. ES is forming that wedge structure I want. Below 59.68, so I will be taking that. But do I want to take ES or NQ? ES is weaker. Starting to wedge up here. ES is already attempting lower. I really like the ES short. I think we can get to 59.43. One, two, three, four, five, six, seven. We have a 90 minute no trend in time on the 5 minute in ES. We have our wedge here in ES as well. So let's see how we break. We're starting to have our wedge in NQ as well. So this is the moment here where we're close to seeing a move. see what takes place here. See, if we break down, can it turn into a failed breakdown? Okay, so we're pushing back up, attempting to break above this wedge structure here on the 2-minute, which is what we want to see. Okay, so NQ is breaking above that. And remember, guys, if you guys remember, I was sharing here how if we reject here, we can push down to new lows. Okay, so we're possibly rejecting from there. Inside that rejection, I know it's a micro structure here, but we're getting a wedge structure. So this wedge is what can create the move away from this consolidation further higher, or we do confirm a breakdown. But the fact that we are reclaiming the 9 MA here in yellow right now is actually bullish because this confirms that we are now starting a 9 MA uptrend on this 2-minute. You can see ES here is trying to do the same. It's attempting to break above that wedge. So can we find our low, revert back, reclaim the 760 zones? ES reclaims 59.68. And we push back up all the way back up to this prior overnight resistance. So what needs to happen here, you may ask? Well, here we now need to see acceptance of this 59.68 resistance, which means any pullback now from this zone needs to create a higher low against this wedge. If it creates a higher low, it can have the opportunity to attempt higher. If it fails to create the higher low, then obviously this is still resistance and we can push back lower. Does that make sense? What we're trying to look for here? Cool, Ricardo. Thank you. Thanks, Mr. Deck. So you see, we're getting the move here, and I've sort of walked you through the structure that needs to happen on a step-by-step basis. I only know that because I've created a library of hundreds of pages over the years and videos. I record videos all the time, especially to my group. I'll do trader view videos. I'll do videos on education, on everything. But this is a classic wedge structure. Now, if you guys remember, I was looking for a wedge structure to form here. We got it. Here's ES. We got the wedge structure. And now we're breaking higher. This is good. I followed my steps. I followed my rules. So I want to take half off. Where was my entry? Right here, right at the original 9 MA reversal. And my stop goes right here. So that means I actually need to move this a bit. If we can get up here to 1.5R, I'll take half off. No, they're both the 2-minute, JD. We need Amazon to push out. Now, guys, you may sit here and say, well, a wedge structure, anybody can trade a wedge structure. Look, any setup works throughout time, okay? What matters here is context. What matters here is trend structure. What matters here is location, okay? All of those combined help you frame your idea, execute on your idea, and improve on your idea. I shared how I wanted to look for a wedge. Why a wedge? Because when an uptrend ends from higher high, higher low, higher high, higher low structure, what takes place? Price will revert and create a wedge structure. Why a wedge structure, you may ask? Because a wedge structure creates lower highs against the swing high and higher lows against the swing low. By definition, that is no trend happening through time, right? Because we don't have a series of higher highs, higher lows, or lower lows, lower highs. If we don't have that, again, by definition, you don't have a trend. You need a sequence of higher highs, higher lows, or lower lows, lower highs to have a trend. When you don't have that, you have a contraction in the trend, and that is higher lows, lower highs, which is exactly what we created here. In ES, we had a lower low, lower high, lower low, lower high, lower low. We then did what? A correction through time that created a lower high, higher low, lower high, higher low breakout. Now the breakout is starting a new higher high, higher low, higher high, higher low structure. Right? So that's all I'm participating in. I participate the trend in the trend. It repeats through time over and over and over again, which is why my trade plans that I share on here, my analysis is rooted in that trend sequence. I am nothing but a trend follower. Okay. I know in high school, we never wanted to be called trend followers. Listen, you can call me a trend follower all you want because I am making a trend to the bank, right? So you just, but it takes time to understand this structure, guys. And I teach it consistently in my group to traders that are serious and they're committed and they want to learn, right? So I want to, thanks guys. I am only a teacher because I have failed more than you guys. Okay, let me tell you. I have failed many times throughout the years, and I've lost much money, a lot of money, but thankfully I've made way more money. I've done well. And it's because I'm a trend follower at the end of the day, right? That's right, Deli. Look, my trading is done in the trade plan. I show up and execute that trade plan. That is all I'm doing. My trade plans take a while to prepare because I am visualizing myself trading that, right? It's like if we're in a manifesting class, I'm manifesting, okay, I'm ready, right? I'm sorry, I like to joke around. 3 decades of trading, a decade of trading. How about that? My group is in the internet. I'm sorry. It's on Discord. Manifesting profits. Oh, that made me laugh. All those beeps in the background are my trading view alerts. They're firing off. I need a raise. Deli, you heard that. They're saying it, not me. I have a lot of alerts, my guy, because I trade swing stocks too. I'm in an NQ swing as well. I'm in an NQ swing from 410. We're at what, 802, 810, 400 points. Listen, I'm just, you thought the beeping was my birds? No, it's, I have a lot of alerts, guys. Sorry. I swing trade. I trade day trades in the futures account, and then I swing trade in my swing trading account. And I'll swing trade futures in my swing trading account. Sorry, I know I've had a lot of questions on the group. Listen, the group is small and private because this is really specific education that I like to share. I'm not a big fan of having 1,000 members in a group. That'll consume my life. You can reach out on Twitter or X on Trading Boxes. Message me. I can share info about the group. And I have a whole library of education. I do a video review 2 to 3 times a week where I go over the daily trade plan, the structure here, what unfolded. I answer questions that were asked during the day in my trade reviews. They're usually 20 minutes, sometimes 30 minutes long. It helps me review. It's a review for myself, right? I review my trades, but I share it with the group because we like to improve, right, on a weekly basis. Hey, Shab, good to see you. So let's see what happens. I'm going to take some off at 1R. Okay, I guess it's not going to fill me. I did too much talking and not enough trading. You see what happens, guys? Why not move up my stop in case it turns around? Look, if it turns around, I'm okay getting stopped out because I have a system in place, right? Nothing in here has told me to move my stop yet. Remember, I am an hourly trend trader with 2 and 5 minute executions. So I need to wait for the hourly time frame to confirm structure for me to move up my stop. If that doesn't happen, then I'm not. It can move back down. Maybe I'll get stopped out at break even if I move my stop to break even. But so far, we're not really doing that. What I should have done, because we're in this tape, is taking half off at 1R. I should have done that. So that's an error on my end that I probably need to correct. I didn't consider the tape that we in my exit here, but it's okay. It is what it is. But it's just choppy. It's just choppy sideways. So my main setup here is sideways to higher. Oh no. Yeah, should have taken some off at 1R, huh? This is 1R, by the way, this gray line. You have 1.6R here at this red line and then 2R up here. So it's usually in that area where I like to take half off. In environments like these, I should be taking half off at 1R to finance my trade. And then I technically have no risk in the trade anymore if I take half off at 1R. I was doing too much talking, not enough trading. So that happened, but you know, it is what it is. If we get back up here, I will probably take half off. But I like this. I like this trade, right? It was a good way to share some lessons and do a little bit of education as we continue to wait. Ceiling birds equals smoke detectors. Oh gosh, don't do me like that. It's trading view alerts, right? Yeah, I have a lot of alert. Oh, you have 3 decades of trading fly there. That's awesome. Thanks, Juan. Thanks, Brandon. Lone Wolf, I have never listened to you before, but you and I are so similar in what we do for analysis, market language, RSI, acceptance narrative, multiple time frames, color coding. Yeah. We yeah, that's pretty much the structure. A mix of Nadro, where I added the VIX and internals. Yeah. I would say Nadro, I don't understand it very well, but I would say my structure approach is similar to that. Merritt likes to focus a lot on context, areas of support and resistance, those edges, right? He says his edge lies in the edges, something like that. And so, what's going on here? It's going to do me like that. So this is failing now to push back above and hold this structure. Okay. So the structure is currently bearish, and maybe now we form acceptance here and then break lower. Maybe. Right? If so, then I'm interested in shorting. But I have no problem taking a stop. Like I said, I took 3 trades yesterday. Thankfully, there were winners. And if I take a stop today, that's fine. It's only the morning. I can find a trade later in the day. Hey, Ryan. Hey, I have to email you, Ryan. I think you're the Ryan I know. Mike and I spoke, and I need to email you. Yeah, I need to email you about some help, since he said you might know some people. How do we get your zones? The zones, look, guys, that's actually what I'm reaching out to Ryan for. The zones are ready on TradingView. It's an indicator, and it's set. The zones for Ninja, we still need some final tweaks. These are automated, right? These are automated. They change colors, but there's some final things that we need to adjust. And once that's ready, it'll be good to go. However, the zones are only available for members, and I do apologize for that. But I had to do that because look at that. Beautiful. I got half off at 1R. My trade is now risk-free. I don't like to say risk-free. What I like to say is I've now financed my trade. So if I do get stopped out, it's a break-even trade. And that helps me emotionally and mentally, and even spiritually, right? I'm able to stay composed and create a more sustainable approach for what I do. And again, look, I've talked about this in the past week. It creates a more sustainable structure. It creates longevity, because as you're trading higher size, what will matter is for you to follow the same approach. And if I'm trading larger size, and I've traded 50, 75 contracts, then I need to find a way to finance my risk in order to be able to sustain trading that size, right? So anyways, the zones are available, or trading views are available, not for Ninja yet, but only available for members, because there's a lot of education that goes behind these zones. They're not just support and resistance levels, right? We can look at anything and consider that support and resistance, but these are specific zones that have taken me years to develop and understand. And that's why we have 3 different types of zones. We have these 5-minute zones in gray. We have these lighter hourly zones here, and then the darker hourly zones. And those are multi-time frame zones, right? So I need to provide that education for you. And that's, or else you won't get much out of these zones. You may think one is support, but what if price breaks through it, right? You may think one is resistance. What if price breaks through it? There's a lot of context that goes behind it. And part of the edge of these zones are that we combine them with our trend structure that we follow and our entry models, which is why they're for members. So I do apologize for that, but it's something that must be done. You guys hear those alerts? Really? Sorry, I was told that you couldn't hear them because they're coming from my computer and I'm not speaking it, something like that. But I'll bring down the volume, okay? I'll make sure that's my homework for next week. Reach out to me, Joel. Reach out to me on X, on Twitter, and I can share info. Omid. Out of respect, I'll bring the volume down. I don't want to interfere with your own trading. Yeah, I don't have a YouTube Emad. I hope I'm saying that right. So look, what we now want to see here is a higher low form, a little bit of acceptance, maybe a wedge, and then break out higher. Similar for ES. Notice how ES we're now sort of holding above this 59.68 zone. So if we can wedge up here, we can get that push out higher. Oh, there it is. We're getting something. All right, let's see if I can get filled at 2R here. Come on, push right through. We're at 1.6R right now. If we can get to 2R, I'll pay myself. Oh, we have news. Tracy's letting us know Trump agrees to start a new round of talks ASAP. Talk all you want. Let's get those prices higher. There we go. Beautiful, guys. Yes, Joel. Trading _ boxes. It's actually one of the comments up above if you want to go up the chat. All right, so I have 5. We're currently up 100 points. I have 5 contracts off out of 6. And remember, I had to do half size because of the spread between my entry and my stop. Look, that was a 745 to 689. That is 45, 1055, 56 points. My average stop is 30 points. So if I'm anywhere between 55 to 65 points, I need to cut my size down by half. Okay. Again, very systematic with what I do. I traded from the break of the wedge, but exited at the middle of the supply and the man shove. They're usually a pivot point. Good for you. Young guy. Look, it's my homework, all right? I'm gonna put the volume down a bit on those. Out of respect for everybody, right? We're all streaming in, we're all taking time out of our day to tune in. But look, just help me out here. I'll do that homework. Your homework is to get those likes up. So let's help out the crew. Let's help out the network. Let's get those likes up, guys. And let's continue to make our points. Stowe, what's good? You in long with me? Yeah, FNG. Hit those likes, guys. 316? Wowzers. That's awesome. Let's get a 400. Why not, right? Challenge ourselves. Yes. The homework here is to get those likes up, guys. Joel, I'm here every Thursday. I'm here to teach and trade every Thursday. So look, let's take a second to go back to my plan. I started off with the 4 hour here. in ES, I kept saying, hey, can we see a failed breakdown of this overnight consolidation into the 2050 EMA cloud? Check. We got that. In NQ, can we see a move lower into prior day low? If not, can we hold this 700 area? Check. We got that. Okay. On the hourly here. Oh, that's not the hourly. Just kidding. On the hourly here, what can that look like, right? What can that push lower and reversal look like? Well, on the hourly, that would mean a break below this London low, prior day low, below or at into the 59.68 zone. Scenario one is to see a failed breakdown, which we saw, and revert back up into what? 59.93, 6,000 resistance, and then consolidate more. What are we doing? We're seeing that. We broke lower, we pushed back up into resistance, and we're consolidating some more, right? Only if we can form acceptance at these lows, then I would be looking for a short. And we sort of did, but we reverted back up, right? So I never got the chance to look for shorts. Let me see how my trade is doing. Okay. I'll keep the last one for much higher. Now that we're pushing up into resistance, we need to look for acceptance and then a breakout higher into 60.18. For NQ, a little bit of the same. We shared in scenario one that we wanted to see a push lower into 700s and then revert back up. We saw that. We're now breaking back up higher. In scenario 1.2, can we now form acceptance up here above 760 and push up higher to 911, 910? We're possibly seeing that right now. If we are, if we can now hold, so the next step that I'm looking for is acceptance. It's a scenario 1.2, acceptance above prior week highs here. If we can do that, then that'll give us more confidence that we're going to break out higher. Okay. So you see how I planned out the day like that? Now, it's not because I think I may know what may happen. It's because I'm following the trend and the trend sequence. And over time, I've gotten to understand that sequence. So my trade plans reflect those changes in the trend, where the trend can flip down from up. So to finalize my recap here, if we can, on the move lower, what happened here? Well, I shared how we were having a lower low, lower high, lower low, and we had RSI divergence, which is one of my requirements for reversals. Okay, same for ES. We had a lower low, lower high, lower low, lower high, third lower low. If you guys remember, thanks, Happy. If we can hold that, or sorry, if you guys remember, most of the time after we find a third lower low, the trend ends. What happened when we formed the third lower low? Price reverted back up, we consolidated, and then pushed up higher. This move lower here, after that happened right here, ended up being a sort of failed breakdown, which triggered the move up higher. Now, the next step that I was looking for was a wedge structure. Why? Well, I went over that, right? If you're just joining the stream, go back and review the whole wedge structure that I was talking about, because this is a pause in the trend. We're not longer having lower lows, lower highs. We are now correcting through time in a lower high, higher low structure. So can we break out or lower from here, higher or lower? Well, we ended up breaking higher. So that confirms the reversal, and we got that, right? So everything is a sequence of steps, if then else. If this happens, then this can happen, or else this will happen. Hopefully all that makes sense. Much, much, much deeper analysis and education with the fellas and the ladies in the group, and some of you guys are in here. I see Laura in here, Happy in here, Chuck, Eagle's in here. What's going on, Eagle? So we just have to wait it out and see, right, I guess. But it's 7:50 my time, 10:50 10:50 for you guys, maybe. And now my time is going to be coming here up shortly. We'll pass on the baton to Stowe, and hopefully he can take us higher, right? This is your most difficult trade situation. Jeff, the only thing I can say is I understand. Look, this environment that we're in is difficult. Yes. Yes, Joel. Joel, message me on X, on Twitter. We'll talk. What was I going to say? In environments like these, you want to focus on the edges into support. You want to focus on failed breakdowns, especially if we're above daily moving averages, the 9MA, the 10MA, whatever you follow. If we're above that, that's, price is confirming to you, like literally, price is the most factual indicator on the chart. Price is confirming to you that's in an uptrend. What do you want to do in an uptrend? You want to look for buys. If we get a pullback, that's a pullback into support. Well, you need to create rules to help you enter into that pullback. I've shared my rules. I've shared my entries, right? Oh, decision making is your. Yeah, I think what comes down to decision making, got that. I think what comes down to decision making is you having confidence in your setups, and that only comes from screen time and a proper development in your studies in the library that you've created of that specific entry model into support. Thanks, Jay Torres. Hey, Juan, thanks. Good to see you here every week, my friend. Hey, Larry, good to see you. Hey, thanks. Just another day. Listen, that's your username. Hey, Brian, good to see you on here. Brian ATL is in Delhi's Discord. Look, guys, Delhi has a big Discord. Good information there. And I'm in there as well, chopping up with the guys and girls in there. Cody, I need help as well. You made much frustrating. Send receipts. You don't need to send receipts. I believe you. You know, you did. You made that money. Made that money. Great. You're in a slump. You know, it really depends what you're going through, what trades you were making. You may need to work on that library, my friend, of models, of entry models to understand. Look, confidence in trading comes from knowing what you're trading and what you're trading. Because in knowing what you're trading and then what you're trading, you know that it's either something this will happen or the other outcome will happen. And at the edges, it's the best look for reversals. Because either we are going to reverse or we are probably going to move back lower. But again, you need entry rules for that, right? Let me move this a bit. Hey, Trader Sam, thank you. I'll see you in Deli's Discord then, huh? Hey, Ricardo, good to see you. Hey, Livewire, I know you. Hey, Mark, thanks. I'm glad it helps.
Great job, Chris.
Hey, guys.
Morning, Chris. What's up, buddy?
Morning. What's going on with you guys?
Well, I would like to quote the famous quote from Happy Punjab One in the chat. Chris, Carreon, you're awesome.
I can second that too. Yep. Great job today, brother.
Thanks, Jim. Thanks. We're all great here. Okay, that's why this makes a great show and a great crew.
Yeah,
This market got pretty spicy all of a sudden, huh?
Yeah, got some news coming in and spiking things up.
Very interesting. I'll have to read through. Maybe I'll bother Tracy to tell me what the news is again. What happened? Can you guys tell me?
Well, no, the funniest thing that Tracy cut and pasted in there, and this is probably what is moving a lot of this stuff around, is I think there was an X or a social Trump saying, we're gonna meet with the China delegation at some point soon, and at some place we don't know where.
Oh, good. Perfect. Okay. Hey, market likes it. I like it, you know?
Oh my God. Unbelievable.
That's so funny. All right. Might get a new
You in
high
a
here.
long stow?
Yeah, I got in one. We pulled back to like 816 and tested the RTH open, kind of tested this whoops. We kind of retested all these highs here with this pullback. So I got in here.
Yeah, that was a good one.
Took one. This 830 person was really trying to sell it, and they're lost. They've lost for now. I don't know. Can we get that? Yeah, I don't know. It's we've already done
I
so
still
many
think
things.
higher.
Yeah, we ran the overnight low. Yeah, which that's where most of my longs were from, was down there at that 720 spot. So I really liked that from yesterday and the day before. There was definitely a player there that was still participating. So yeah, now I'm just in this. Let's move my stop to in profit just so everybody's aware. I've been doing it all day.
Go.
All
love it.
So yeah, Chris, I made some big changes to my process, and I don't know if they're working or not. We'll see.
Yeah,
Verdict's out.
Good.
Yeah.
I like that. Look, you have to finance your trade, and that keeps it a little bit more sustainable. At least for me, I like to pay myself. It allows me to have more emotional and mental stability and keep my those bank accounts full, and keeps me in the game, like Deli says.
Yep, you're right. I know you're a big proponent of this as well, so I'm giving in for now. No, but it has been helping. And
All right, guys, I'll let you guys go.
Better.
Do your trading. Do what you know best. All right, Stowe, Jim, you guys have a good weekend.
All right,
Talk
thanks,
to you
buddy.
guys next week.
All right, Chris. Thank you. Great job today again. Appreciate you as usual. We'll talk next week.
Jim, good morning, my friend.
How you doing, brother?
Oh, good. I got some good news for you.
What is it? Tell me.
It's gonna be a pretty big day at the CAG house. Might want to keep an eye on that mailbox.
Oh,
Just saying.
I'm gonna run as soon as I'm off the screen right now. I'm gonna run down and just double check. You never know.
I think. What's your normal UPS time? Do you have like a normal guy? I've got a normal guy.
No
Okay.
idea. No
All right,
idea.
cool. Sounds
All
good.
We
Well,
get-
just tell Mrs. Cags when a bunch of weird stuff starts showing up that it's my fault.
Oh, she'll know. She'll be out there. Anyway, so interesting. Kind of just looking at the E-mini S&P real quick before I let you go.
Yeah.
And other than some crazy wick that we saw, I look at the 30-minute candles. At 9 to 9:30 candle, we had a crazy wick. But other than that, and that was before the initial balance, so I'm not going to count it anyway. But we've been bouncing up and down across that initial balance. It's almost like a pendulum. It's almost like clockwork. We're driving back up to it, the initial balance high right now. And then a lot of the second observation is a lot of the low volume nodes are kind of starting to fill out on the daily
Okay.
market profile. Volume
That's
profile,
interesting.
sorry. Yeah.
Okay. I've been looking at ES. I looked at ES a lot yesterday. I was waiting for that 6,000 that never happened. I'm sure a lot of people were. But yeah, ES is still not above its RTH open print right now, whereas NQ is, well above it. And this is, we made a little bounce down here, and it seems like we retested and rejected it for now. So I got my eye on that divergence too.
All right.
I don't know. I did kill this trade here because base hit mode, and we were rejecting the previous week high again. So just trying to take it easy.
It's all right. You're doing great, man. You're back. I threw that on X. Stowe is back.
If you say it into the world, it can be true.
It is true, brother. All right, man. Listen, you have good luck to you today. I'll be in the chat and paying attention to every word.
Sweet. Sounds good. Thanks, man.
All right.
Good morning, everybody. Yeah, give it up for Chris. Chris is the best. I agree. Yeah, interesting. Interesting that this was all just like a silly tweet. That was a really big sell. I don't know. I didn't buy it again because this was extremely violent. Maybe I should have. Probably not. But yeah, traded a bunch today. Traded a bunch yesterday too. And pretty good days on both. So let's go back. Let's just do our normal start the day. We'll go back and we'll check our 3 a.m. open, which, right here at this 740 spot. Like I said, I was really leaning on, we can actually go back into yesterday. I know I didn't stream this, but I was trading it. Yeah, this 720 spot, we can just get into this a little bit. So this is yesterday. This is, I think yesterday was Wednesday. Yeah, Wednesday the 4th. And what I was seeing was, just this area kept being, respected. And it was ultimately like the big buy spot, 720, that took us higher into the end of the day there. Pretty small rangy day yesterday, but that stuck out to me. I don't know. And then as we get into, we'll get into here's our 3 a.m. open. You see, we kind of open above that spot, and, London shot straight up, and was a really good pivot all night until, this is all a news candle. So I give this less credence when it smashes through this. So I see your positioning as mostly long. I've got that 720 player in my head, and if you can see, that was exactly the bottom of that news spike. I forget what our news was today. Oh, unemployment claims. Okay, cool. It's always something. For my purposes, I don't necessarily care what the news actually is. I just yeah. So we came down, tested that spike, and it just held and held and held and held. So yeah, 720, dude, winning the game so far. As far as my executions today go, I just took, pretty simple base hit stuff. We got below the pivot and reclaimed it, and I got this little delta flip here. Obviously, I'm leaning long for all those other reasons that I just explained. The London opening range, we're above it. Yeah, so just, scalp a little long and took my stop in profit. First time ever. So there's that. And I don't know, look, it saved me 15 points. I got 2 points instead of minus 15. So that's interesting. Once I got stopped out, I'm just chilling. This is pretty early in the day for me. So still just waiting. We came down and we touched the London opening range, and we get some response. We get some reaction here. And this, the candle flips to positive delta. So I get in again. And now I'm just leaning on this London opening range to be support. So I scale, scale, scale. And this, I did not move my stop on this one because I was playing for this to be low day. So I just scooted it up here to right below this candle. And we eventually got taken out. And then we come down and we start messing with the overnight low. I do the same thing. Get long here. I want to see this 720 dude win or lose. So this is a big pivot for me, big point of interest. So I take, long, scale, scale, stopped out, long, scale, scale. And I take my third scale here. And I just tuck this, I moved this stop up right here underneath this candle. Get stopped, get back in, scale, scale, scale. And then I took that stop in profit. And then I went and made a breakfast burrito. So that's what happened to me. Because I was starving. And I didn't get to run this morning, so I figured I should eat something if I'm going to run in the heat today. I typically run on an empty stomach, but that's only if it's like if I get my first thing in the morning run. And then, things got a little weird. I wouldn't consider this to be like anything necessarily playable. This violence happened in 15 seconds. The tape was whipping around. I hope Leo got this OR mid short. I'm sure he did. Yeah. So that's that. And then right before I got on, we cleared. This looks finally like actual price action. So I started to look for a long. I'm only half size into these spots up here because I'm not trying to press at the edges with full size. Just, still managing my risk, managing my drawdown world that I'm in right now. So got one here, scaled, and then we were absorbing into this previous week high. So I just got out of it for 30 points. Not trying to be a hero on a Thursday. Morning, Tracy. Morning, Deli. Trump and Z are speaking now. G? Is it Z or G? I should probably figure that out. 2020. I better get the pool party invite for sure. I'll bring everybody. We'll do a pool party contest. I'll come around, pick you guys up in the NinjaTrader van. I don't really like to fly, so you're gonna have to ride in the van. But we can listen to cool jams. That'll be fun. It's a proper road trip, in a van. It's she? That can't be right. That can't be right. Yeah, I listen, I bring sunscreen everywhere I go. Big sunscreen family over here. Daily ritual. All right, cool. It's she. Okay. Gibson Dolo, but I do play both. Both my two main guitars are a Fender and a Gibson, and I alternate between them for different tunings. Yeah, I have a Fender Tornado that I use for standard tuning, and then about half of my stuff is in D standard. So I have a Gibson SG that I've had since I was 16, and that was a long time ago. So it's an old girl. It's been with me everywhere. It has seen every continental state. It has played a show in every continental state. Yeah, are we gonna get that 6,000? I'm kind of disappointed that they already made that in the overnight. It's cheating. I mean, yesterday it was like a point away. I think, yeah. Four ticks away from that 6,000 mark, and they couldn't get it done yesterday. That high in ES yesterday was disgusting. I hope my friend AJ didn't see it. He would have been traumatized. Ooh, I got a new coffee maker yesterday, and let me tell you, it was the best decision I've ever made, possibly, other than getting married. My wife doesn't watch these streams, but just in case, it doesn't hurt. Doesn't hurt to throw those in. Jeff, it's called an Aiden by a company called Fellow. It's quite fancy. But it's pour over quality coffee, but with like drip protocol. So you can program it, and it's like doing pour over coffee. It tastes like a coffee shop. And I'm not an espresso person. I just like black pour over coffee. So it's perfect for me. It's quite exotic, yes. Well, I think it's from America, so. Yeah, it's so cool, 2020. EH, what about the kids being born? Yeah, I mean, that was fine. It wasn't really a decision that I made, though. I mean, they just kind of showed up and then started eating my food. It's called Aiden. The company is called Fellow. Pretty sure. Yeah, it's like when you just Google it, it's like a black box. Yeah, Jeff, I just don't like espresso that much. I don't know. So yeah, this is a pretty good day. I'm feeling good on the comeback. It's nice. It's nice to know you can pull yourself out of a slump. It almost feels my friend Ralph that I talk to on sometimes that is a good trader. He said this to me a long time ago. He's like, yeah, coming out of a slump is almost cooler than winning because it makes you feel like you have some sort of superpower. And every time that you successfully manage to get out of a drawdown or get out of like a bad week, bad month, sometimes, it does feel like that. You're like, it's just like a little push in the right direction. And it's kind of like, I'm lucky I get to trade with you guys, and I have the NinjaTrader people and my OFL dudes and my trader friends as support. But like, even if you're all by yourself doing this, you kind of have to be your own cheerleader a lot. So giving yourself those positive affirmations, it doesn't hurt. It certainly does not hurt. I'm back, baby. Yeah. It's the summer of George. No, girl trader. I'm not still long. I got in here, took one, and then I took my second one here for, I think it was 30 points. Something like that, 16 to 51, 30, 35. And that's plenty. Omid, I'm watching this. So this is a single print that's forming. So if we get to 11:30 and this blue highlighted area is still here, that will, give me a little more confidence that maybe so sometimes, let's talk about this. So sometimes the day context completely reverses like out of nowhere and you have no idea why, but you have to be able to recognize that. And part of my bad week last week was like refusing to recognize that. So let's look at how this day opened, right? So we've got, this news spike was pretty insane. So a lot of people got hurt here. And coming into this, I saw this spike over the previous week high as like, there's our exhaustive pop. ran those stops, and then now we're going to try to grind down. I'm not willing to get into shorts until I'm below this 720. And also, let's look at the high time frame for a second too, for added context. So here is the big old 30-minute chart. And so you can see that we are still building this big volume node above this previous balance area that we left finally. So when you push out of an area and then build volume up there above it, it's good confirmation that like we're trying to leave. We're trying to get into price discovery mode. So yeah. So all those things have me being long in general. So that's why I'm willing to take those shots all the way down until these 680s. We start to lose this node, then I'll start getting more neutral again, or like we're going to retrace. But so yeah, I'm leaning long for like 5 reasons I think I've explained already this morning. But this is bearish price action. Opening range drive immediately stuffed, making lower lows. They're still very scalpable opportunities since we're taking base hits. Don't forget. And if I forget, please remind me. But yeah, so we're making lower lows, and then we start to build volume down here. That's not great. Not great at all. So this was feeling like a very bearish day. And that's the other reason I was kind of done right here. So I'm like, I don't know. I can't fight bearish price action forever. It's exhausting. So I just let it go. But then this is a very clear context change. Look at, like, you see this consolidated pattern. This is auction. This is an auction right here. Selling, buying, selling, buying. Then no selling. Selling is gone. This is just a big line of blue candles, which means like, okay, that's not an auction anymore. So this auction has determined that price was a little too low, and we're going to take it higher. And then this, crazy news stuff happened, and we came down and retested it. And then, this is our big context change. Now we have bullish price action on the day. So what started as bearish price action, it could easily turn into a trend day up. Like, happens all the time. And look, now we've run the overnight high. That's crazy. You're not really supposed to run both. That's not a stat, but you're not supposed to. And I see we're about to get, let's say, no, we got 600 or 6,000. There we go. Cool. So that's fun. So a long way to answer your question is yes, I'm watching for this to continue to be a trend day up, because the context has clearly changed, and this bearish price action from the open is in the rearview mirror. And now I'm looking at this. Yikes, that's nasty buying right there. Whenever you see this, like, yeah, that's just gross. That's just turbo bid. Everybody getting hurt. Except buyers. So yeah. So now I have this context, and I'm going to play that context until it goes away and changes, and then we'll adjust from that. All right. I hope that answers your question. Oh, dude, percolator espressos are awesome. That is cool. I love an old school. Jim still uses one of those. I'm pretty sure he talked about that the other day. Not doctor recommended says, hello, how can I set up the order flow for the waiting orders? The blue and the red. These are not, by the way, these are not waiting orders. That's not what a delta volume profile is. But this delta volume profile is part of the Order Flow Labs tools. So if you subscribe to the NinjaTrader suite of OFL tools, then that's just one of the tools you can set up. And there's guides and stuff inside of the OFL Discord, and on websites and YouTube. Like it's exhaustive. So there's lots of advice on how to set these up. Trading Tour. Hi, Stowe. Is it a good occasion for entry on NQ? I don't know. Maybe. I don't know. I don't know what they're doing up here. I mean, the bid is just partying. So, like, yeah, maybe this is a good entry, or this is the worst entry ever. You don't really know until you're already in it. Personally, no, not for me. I'm going to wait until, we're at least down here. Come retest these. That doesn't mean the price can't just like run away without me, because that happens. I'll also watch this. I mean, we beat that. Come down and retest this news spike. I'd be interested maybe in a tiny one, but what's the range already? 225. Yeah, I mean, we've gone pretty far. But yeah, it's partying. I don't know. Personally, I'm never going to be able to give you a good entry, because usually I don't know that it's any good until the trade's over, typically, which is how you know. Trading is like, you ask the market a question, and then you have to wait a second to get your answer. Nolan, I am just always trading MNQ. I don't have any desire to go back to NQ, and especially on this account, I can't be trading a full mini with this size. That's crazy. Anybody that's trading a full mini with a 10K starting balance, that's also down to 8 after my terrible week last week, I don't know. That's just not appropriate risk for me, for at least my style of trading. So it'll always just be MNQ. And please, if anybody ever sees this little sign that says instruments say NQ, tell me, because that means that I forgot to switch it to MNQ and I'm about to be way oversized. So I haven't made that mistake yet. Knock on wood. But mistakes happen. Yeah, Omid, a single print is a auction market theory concept. So the way that a TPO chart works is it uses letters to define. It's just like maybe I can pull one up for you this afternoon, or have Leo pull one up for you this afternoon when we're on. But instead of candles, it's just letters, and each 30-minute period gets a letter, right? So A period 9:30 to 10, B period 10 to 10:30, etc. So these are right here. This blue area is just an automated OFL tool that makes it so I don't have to have a TPO chart on here. And what this means is, I think we're in, so A, B, C. I'm bad at these letters too, by the way. So this is potential single prints for the 11 to 11:30 period, which I think is D period. Could be wrong. But so if we get to 11:30 and that period closes, that means that this is a single print, meaning price only traded here in one period. And the way that we use that, well, the way that I use it is, if we're creating single prints, that means that price is extremely biased in a single direction. So when price is only trading spots for one period and then continuing to move higher or lower, it's just a sign of trend. So that's all. You can just use that to, help create your bias for the day. Yeah, Omid, I'll wait for a pullback to go long for sure. Curl Trader, you have a good day too. Yeah, take your money and run, man. Nothing wrong with that. What else? Mike Smith says, is that a value profile to the right? I don't know what a value profile is. This is a volume profile over here. The gray is a volume profile. And that's just all the volume from the New York session. Or if PAX is in here, the Chicago session. A lot of time zone arguments I get into. I don't think a day goes by that I don't get into some sort of time zone argument. Usually I'm starting them. I'm not saying that I'm not instigating those, but it's funny that it's that common of a thing. Lone Wolf Trader asks, how much prep time do you take in the morning, Stowe? Like almost none, honestly. Yeah, pretty much none. I would say like 5 minutes. I kind of just do the exact same thing that I walk you guys through. I'm just like, okay, where's the, I walk back to like 3 o'clock in the morning. I'm like, okay, here's what the London session did. Okay, here's a crazy news spike. When you have a big news spike like this, also, I stole this from Brent Donnelly, who wrote a very good book called Alpha Trader that I recommend that you read. It's my favorite trading book that I've ever read. A big thing with these, whenever you have a news spike like this, these can become very good pivots, very good areas of interest to keep an eye on. The extremes of that newsprint. If the market has a big reaction, it's even more worth looking at. But yeah, man, that's all I do. I just look at that stuff and that's it. I'll pull up the high time frame thing, but I also I watch the market every day, so it's kind of like I'm already thinking about all this stuff. Like I wake up and I'm like, okay, 720 guy. I remember that. We broke out of the balance. Where have I identified players that are, doing business that can be points of interest? That sort of stuff. That's why I can't take a break. Because if I take a break and don't look at the charts, then I start to forget all that stuff. And then it will take me a couple days to catch back up on that. So. What do I use to plot the euro open? I don't plot the euro close. I just know when that is. It's just 11:30 Eastern time. But for this, I use an OFL tool. It's part of the MGI. It's called MGI, and it stands for market generated information. And it's the tool that plots all of these, things, RTH open or mid pivot. And all I do is I set this. I have an MGI that just does this one thing, and that is a custom session time 30-second opening range. So, and I just set that custom time to be 3 a.m. Eastern time. So it just draws this green box for me, so I know where it is. Yeah, I just take a quick look. I don't have any real, prep. I drink some coffee. I listen to music. My kid's normally saying something funny or goofy or weird, so we do that. I don't know if that counts as prep. Maybe. Man, this thing is ripping. This is wild. Yeah, I think, Logan, the prep thing is like, I don't know. It depends on what your process is. I'm just scalping. If you're looking at higher time frame stuff and you're trying to create like biases over the course of weeks and months, then I can see why you'd need to prep and then, draw your zones. And there's nothing wrong with that. I also found a long time ago that the more prep I do, the more, like bias I get throughout the day and I can't unstick myself from. And the way that I trade, like I need to be able to pivot, change bias in the middle of the day. Like here, like here's a great example: bearish, neutral, bullish. Like if you're still holding on to this thought, this bearish thought here and here and here, like you're in some pain, and that sucks. So being able to successfully flip your intraday bias is key. And when I'm at my best, I'm doing a good job at it. Norseman, I don't run the Black-Scholes model. I just say my favorite Greek is charm. So because I like to confuse people. Nolan asks, so Stowe, you use chart based on NQ but trade MNQ? Yes. Yeah, their delta is different. Their everything is different. MNQ is a much more there's a lot more volume on MNQ. Yeah, they're different products, so they're going to be different things. Typically, they trade around the same price, so that's why you can use one instrument to trade the other and manage your risk in an appropriate way. Obviously, because it's an MNQ contract is 1/10 the size of an NQ contract. But yeah, I look at all of this is NQ data. This is an NQ volume profile. This is NQ delta. I just find it to be more useful because there's less volume. It's less choppy. And when you can pick out, large participants a lot easier on NQ than you can MNQ, at least in my experience. Trader Nautilus, you have the two data streams on your chart, NQ and MNQ. When you switch from NQ to MNQ in your chart trader, you do not see the order labels on your chart. Have you gone into, let me see, I can help you. Okay, so here's your data series, right? And you won't be able to see what I'm doing because we lose the crosshairs when I get into an indicator thing. But so you have two data series here, right? You have NQ and then you have MNQ. Now I have MNQ set to 1 minute because loading two volume data series is, it takes a lot of data. And also there's no point. You don't, because I'm not looking at this one. So it can just be a 1 minute. But then you have to go down here to trades. Do you see this spot towards the bottom? And then it says trades, color for executions buy. I have Dodger blue, and then magenta for sell. And then I have it set also to just be the markers. But you can have it do either do not plot, markers only, or text and marker. The text is a little much for me. And then you can change the size of them there. So that's how you got to do that. You got to get into your MNQ data series and make sure that you have this trade stuff set up like this so you can see your trades on chart for MNQ. Hope that helps, Trader Nautilus. You're welcome, Omid. Of course, anytime, buddy. Yeah, please keep asking me questions. It's what I'm here for. Yeah, Mark DePaulo, the value area is defined as where 70% of the volume has been traded. So you can see it. I have the gradient just set to be a little more, a little darker for the value area. But right now it's 700 to 833. Also a sign that, we're possibly trending as we're trading outside of that value area. So Yeah, sure, Nolan. No problem. Sufjan. Will you take any trades today? And do you trade morning or afternoon? So I trade both. I have taken tons of trades. If you look, they're all back here. All these little arrows and blue and purple magenta dots. Is magenta purple? It's probably in the purple family. Last trade I took was here, long 816, scaled one here, and then got out 852. So Mike Smith, the blue and red indicator is called a delta volume profile right here. Yeah, rogue shots. To hide the M and Q bars, you just have to make them transparent. Here, I'll open that back up for you again. Okay, here's my data series. Here's M and Q. I don't know if you want to just take a screenshot of this or whatever, but if you see down here, chart style, transparent. Yeah, you just want to make all that. You just want to make this transparent. I have line on close, so it's like in the background, there are no candlesticks. It's just like, you know, a line doing stuff. And then I just have that line transparent. So it's really partying up here. Nolan, yeah, I have it's not that big of an insight. It's just it's a trade setup that Brent put in his book. And it's when you have these big news reactions to mark the top and the bottom of those spikes, and those normally become you know, areas of interest. In this case, it's kind of like it's set the overnight low and the overnight high. So this isn't the best example of it, but it's still good. So yeah, just like when you see a big news reaction, go to that candle, mark those levels. Do it for CPI, do it for Fed announcement stuff. Magenta is a primary color? No, it's not. Get out of here. It's not in the Roy G. Biv, right? Aren't those the primary colors? I actually don't know. I have no idea. My kid has these like bath bombs and like these, you know, little tablets you throw in to make different colors. And she's way better at mixing colors to come up with new colors than I am. It's insane. Red, blue, and yellow. Okay, thank you. Thank you for Tintin. ASM, why am I not taking a trade right now? I don't have one, dude. I just don't have one. I don't want to buy. I mean, this is what I could take like a B plus trade right here and get long this 905 guy. Because if we zoom in super close to this, you know, 20-point range, I can see that this bid is being supportive here. But I'm just not going to do that. We're so high above into this, you know, +2 standard deviation. It's just not. It's a B trade for me, and I'm not taking B trades this week. Oh, sure, Trader Nautilus, no problem. It's fine. It's not crappy. Also, like this is good. It's okay to wait. I mean, I'm trying to wait more. I'm trying to be more patient. Sometimes you just gotta wait. Young Bleezy, good luck on your short, bud. Godspeed. George, I probably execute on, if we're talking number of trades, that's different than like how many, you know, trade ideas do I execute on. I probably try to execute on between like 4 to 10, depending. If we have a day like today that like it's doing a complete, you know, about face with its context. That's usually more towards the 10 side, because it's kind of like trading 2 different days in the same one. But yeah, 4 to 10. But then I'm counting this as one, because all of this is like I'm just trying to lean on this 720 dude. So like this is one trade, and this is one trade, and then this is one trade. So I'd say I've taken 3 trades today, but I've probably round tripped. I mean, I did 1, 2, 3, 4. So that's at least 17, 18. I'd say I've probably round tripped like 20 contracts so far. How many more trades are you expecting to take today? Are these real questions? I have no idea, dude. How would I know? 6.3 more trades. Possible. I don't know. I guess the only way to know how many trades you're going to take for the rest of the day is if you're done and the answer could be 0. So I guess there could be an answer for that. I plan to take possibly more than 0 trades for the rest of the day. Mark, I appreciate it, troll. I'm good at trolling too. It's a skill, it's a gift. And just like anything, you got to get your 10,000 hours of trolling in too if you want to get really good at it and you want to really apply yourself to it. There's a path for you. Maybe someday you too can moderate a Discord filled with angry traders. I think that's what you get when you get your 10,000th trolling hour. They just put you in charge of a unhinged trading Discord. Omni, you still using limit orders? Is that why you didn't get filled? Am I ever going to talk you into marketing it? Probably not, huh? Tom, nobody ever asks why I'm not trading because I'm usually always trading. This is just the first week where I haven't constantly been in a trade. So it's my first time with that question. Oh, Susie Q, you're right. Magenta is in the CMYK. You're right. Okay. Okay. Susie, you know a lot about this. That's cool. That's fun. Susie's got color alpha. That's interesting. I love learning new stuff like that. Young Bleezy asks, Stowe, when do the Pirates trade Skeens to the Yankees? 2.5 years, 3 years probably. I think they have control for 3 more years, maybe 4 years, and then they'll use one of those control years as, the trip to the Yankees. But I don't think it's going to be a direct path to the Yankees. He'll probably have to go. I don't know. Cole went to the Astros because he had a bad year, and that's when we were going through a bunch of pitching coach changes too. So Cole kind of fell off for a second and then got dealt to Houston on kind of a down note. But if Skeens can keep up what he's doing for, a couple years, and there's no reason to think that he can't do that and avoid injury, maybe he could go straight to the big show. It's possible. I'm really bad at colors. Sab, I also I can't draw anything. That's another Achilles heel. Neil, I don't choose violence on Twitter. Not anymore. Yeah, Omid, you can look for exhaustion in a trend day and find it. But like, I don't know. I wouldn't consider that exhaustion. This is so this is probably like an XY setup right now. Wow, point of control just moved up here. That's wild. Look at that. That's impressive. Good job, buyers. You're killing it. So XY, you can correct me if you're wrong. If I'm wrong here, I don't know if you're awake yet or in the chat. I haven't seen XY yet. But if we lose this node, dip down in, and then come back, and we reject this spot where buyers lost control, then that can rotate down. I'm pretty sure that is the big volume lockout trade that XY likes to take. I'm trying to learn it. I'm trying to be able to identify it. So we're all learning that together right now. XY can tell me if I'm right or wrong. That will lead to absolute zero. Correct. I did it. Aha! And it's kind of doing it right now. But yeah, I don't know. I'm still not taking it. That's just for my friends to take and for me to enjoy when they win. Susie, you spin wool for real? That's cool. That's so awesome. Do you have sheep? Oh man. Do you guys want to hear something completely ridiculous that I'm going to do? That just occurred to me. Asking Susie if she has sheep. So I have all this woods behind my house, and it's super overgrown with like a bunch of poison ivy, a bunch of garbage. We bought this house last summer. I'm like, there's so much more yard back there. I could double the size of what I'm up to. Put a cool deck back there, fire pit, koi pond maybe someday. But so I bought this like bushwhacker thing, and I'm back there. I'm like, this is gonna be my summer project. I'm taking this whole thing down, going through the brush, and I end up with like incredibly bad poison oak or poison ivy or something the other week, and it's still driving me crazy. So I'm like, man, I'm gonna have to pay somebody to go back there and do that, which I didn't want, right? Because I don't want to do that. That's just a waste of a good landscaping opportunity, in my opinion. And then I remembered that where I live, they have companies that you can rent goats from, and they just bring goats to your house, and they just let the goats eat all of the stuff. And goats will literally just eat and eat and eat and eat and clear your whole brush for you. So I've got some lady coming to get me a quote for how how many goats I need, how long it's going to take the goats to eat everything I need them to eat. And yeah, I think it'll be super fun, and all the neighborhood kids can come over and see the goats. So yeah, I'm excited. The other cool part about the goats is they come with a donkey that keeps them safe from predators. So the donkey is like the goat's boss. I really like this. I just really like the whole concept of that. So that's why I'm excited. Yeah, exactly, Mark. Yes, it gets that knotweed. That stuff is terrible. We have that everywhere up here. It's just like a relentless vine. Sorry. Yeah, Deli. Deli's talking about gold, keeping the chat on track while I'm talking about goats. Larry says, so what does the accumulation of the volume profile up here tell you? Yeah, we're like, we're building, we're pushing and building. And if we keep pushing and building, that will be a sign that the trend is going to continue. Alternatively, if we lose this thing, then that's that XY setup I was just talking about. But, this whole thing has been a push and build. So we pushed out of the 800s, built this. We pushed out and built this. Now we pushed out and built this. The other way to see those pushes too is, those single print areas really help also see when volume is pushing out of an area and refusing to retest it. So good sign of trend continuation there. Oh, Jim's back.
I'm
Hey,
back.
bud.
Yeah. Good job today, as usual.
Thank you. Thank you. Thank you. That went fast.
Yeah. Yeah. Time flies. Straight as an arrow. Fruit
didn't get a
flies
chance
like
to-
a banana.
Time flies like a banana. I love that. That's good.
Fruit flies like a banana.
Oh, fruit flies like a banana. Okay. I didn't get a chance to get back in, but it's
Yeah.
okay. We got hopefully maybe they'll give me an opportunity in the next hour or two to dip a little lower and I can climb in, but we'll see where we're at this afternoon. I'll be on with Leo, so
Yeah.
yeah.
Well, there's several markets are kind of reversing their fortunes today, and I'm going to cover that in a real quick edge report when me and you are done talking. But
Okay.
yeah, it's kind of like a tug of war between the crazy stuff coming across the news wire. The latest is Lutnick saying a bunch of crazy stuff,
Okay.
and anticipation of tomorrow's NFP.
Okay. Interesting.
Yeah. So the call went good. Things are not going good in negotiations with the UK, with the EU. I mean, it's crazy.
Do you think it would be easier if they just draw the thing that they're about to say into the microphone out of a hat every day as opposed to having to come up with it? I think they could save a lot of time. I don't know.
They may be doing that.
It could be doing
actually.
that right now.
We don't know. We don't know. So, but the president's trying to be positive. He's the glass half full guy. I think it's good cop, bad cop with him and Lutnick today.
Okay. That makes sense.
Yeah. That's all right. It's all pretty good. So, real quickly, and if you already mentioned this, I apologize, but non-farm payroll, big deal on Fridays. Do you change your thoughts at all going into it or no?
Nah. I just look at those spikes and
Yep.
because I don't participate in the market from pre-market at all. So, but if I see those big spikes, I'm interested in the reaction at those points. That's always been a thing that I've looked at ever since, a couple years ago when I read that in that Donnelly book. Do you know Brent Donnelly?
No.
He's a really cool guy. Yeah, you would like that. You would like that book, I imagine. But no, other than that, I mean, Jim, honestly, I don't know what this stuff means. And also, we could get back to the time when, bad news is good. There's so many different things at play. So I try to keep a short memory.
I'll be honest with you. I mean, in my whole career, my whole life, I'm going to confess, when a number would come out, I would have an opinion going, before. It's like, all right, if this number is here, it's going to be bullish. If this number is down here, it's going to be bearish. And there's no rhyme or reason to it. You have a bullish number, the market breaks. You have a bearish number, the market. It's a wild phenomenon for me.
Yeah. Well, the other thing with these numbers too, and I don't know, Tracy might kill me and correct me if I'm wrong, but like a lot of the reaction is based on how bad or good the analysts were before the number came out too, because it's like, oh, it's a big miss. Like, okay, whose fault is that? Like, I'm under the impression that analysts are paid to, predict this, and like, yeah, it just seems like a bad weatherman that day.
Yeah. The forecasters suck. We could say that.
Yeah. Okay. Okay, cool. I didn't know. I don't want to. Yeah, if I dip my toe too far into macro world,
Yeah,
nothing good can happen. But okay, same page.
Yeah, no, for sure. Oh man. Anyway, great job today. Appreciate you as usual. You're gonna be back this afternoon with Leo.
Yep.
Fantastic. Looking forward to that as usual.
Me too.
The grand master of order flow.
And let me know if you got to come on early and do some unboxing.
I might have to leave, I guess, because I'm gonna have to probably eat.
Oh yeah, you'll be eating all kinds of stuff shortly.
All right, all right. So thanks again, Stowe. I'm gonna grab the screen real. Oh, hang on a second. I can't grab it unless I share, can I?
That's part of it.
Yeah, that's that's part of it. All right, I'm gonna grab the screen real quick and just
All
kind
right.
of go over some interesting levels here.
I'll see you later, chat. Thanks, Jim.
All right, all right. Thank you, sir. All right, so let's start with bonds. You know, Deli talks about it. I talk about it. We've given back all of our gains from overnight. We're all the way back down to the session lows right now in the 30-year Treasury bonds. Something happened to make this market change its mind. You know, we have a situation where we have we're looking for a double break, right? We have a single. This is an edge full stat. We have a single break to the downside. I'm looking at my cheat sheet here on the left. And that's clear, right? Here's the initial balance low, initial balance high. We broke down below it. Now there's only a 7.69% of the time, looking back 6 months, that we even wick through this call resistance level up here at 114 even. So again, not expecting that to happen. We'll see what happens later on in the day, and maybe we're done for the day. A second distribution at the bottom of the volume profile never formed. Now, why is this important? Well, let's go back and say, hey, we have this correlation kind of back in track here with the stock index futures. And here's the E-mini S&P right now. This is, again, a 30-minute candle. And, you know, we've had some, I have this kind of exaggerated this this y-axis, but you could see, I mean, we were playing ping pong within the initial balance, right? We had initial balance low at S2 of all places, and then we hit initial balance high slightly above the London initial balance high. Finally, a break on through, right? We broke on through that call resistance level at 6,000. Remember this elusive 6,000 level we've been looking at yesterday? It never happened. Today we got all the way up to R2. We might not be done yet at 60.08. JAX 4 is the next level up. So there seems to be that kind of inverse relationship back again, at least intraday, between the E-mini S&P and the 30-year Treasury bonds. So that's kind of takeaway number one. And again, there's probably some positioning here going into the, let me fix this a little bit better, going into the tomorrow's number. Gold right now, you know, we made new lows. We made new lows. This last 30-minute candle, we broke through a lot of areas, right? 0DT put support, JAX 4, that S1 level. Right now, we're really kind of flirting with previous sessions lows right now. Actually, we're below it at 33.67, and then that one-day min is the next target. We almost wick to it, not yet, but this is a pretty big sell-off here in gold right now. That's at 33.60. And remember what the daily chart looked like. We had that midpoint level on this previous benchmark candle here that we saw on Monday. We're almost to it, and it's also lining up right with that ADMA. So that should be some support there. I know we went through my little rectangle there. That happens. Can't help it. But that's kind of the story on gold right now. The big wick on the top, too. So the sellers are coming in pretty fiercely here in the gold market right now. And let's just take a peek at silver. Remember, everything was off the hook this morning in the metals. When we woke up, everything's up between 0.5 and 3.5%. We have this interesting kind of seller's wick again on this pretty big green candle here. We have this old highs right here back in the end of March, and I'm just going to eyeball that at approximately, we'll just round it up to 35.5. And right now we're right at that level here. So I'd like to see a close above this rectangle here for me to be like, all right, we're going to keep on keeping on. But alternatively, we could also have some kind of retracement going back as well. On this as well, because we do have a zone here between these previous highs back in March and then this long-term consolidation level, which is now support. It was resistance for a long time. Now it's support. So we'll see where we end up today in silver. And if you want some levels here, I'm not sure today's trading is over with silver. Really nice kind of sell-off, nice retracement in place. We have that one-day max. Don't worry too much about the word max or min. Worry about this area of interest that Menthor Cube brings up with us. 36.23 right now would be the next target on the downside if we get past R3. Now R3 we don't see very often, but we are seeing it today, and that's at 35.55. VWAP is the other thing to look at. I know this is a 30-minute candle. It might look a little differently on a 15-minute candle, but we're below it now. And a close below this now in a 30-minute candle on this session VWAP could mean sellers are now firmly in control. I'm not ready to say that yet until this candle closes, which is going to close in a couple seconds. But that's kind of what this is looking like as well. Alternatively, the point of control here is wicked, fierce 35 spot 98 half. That point of control. No volume below here. Look at this. This is a classic capital P-shaped volume profile on the session. If I write a book about this, I'm going to cut and paste this chart right here. So this would be a target for me. If I was bullish, this would be a target for me, that 35 spot 98. All right, everybody. Appreciate everybody being here with us today. Great session this morning from everybody involved. How about Russell Rhoads? Go Hoosiers. Great day today. We're not done yet. Me and Shai are going to do a hot commodities report. So that's at 2:30 East Coast time. And then Stowe is going to be back in the house with the man, the myth, the legend, Leo the Tiger. Leo, the main influencer at Older Flow Labs, is going to be with us this afternoon trading the close. And there should be some movement here, I think. There's market's still going to figure out where that's to end up before tomorrow's number. Having said all that, everybody, thank you for being here with us. Appreciate everybody in the chat. You guys make this as great as possible. So really, really appreciate everybody being here with us today. And so we're going to take a quick break. Be back at 2:30. See you then. Thanks for coming.